Alors, bonjour à tous, good afternoon. It's a real pleasure for me to welcome you at Cyrano today. Je suis vraiment ravie de vous accueillir à Cyrano pour cet événement organisé par les chercheurs du groupe Finance. La mission du Cyrano est une mission de recherche, mais aussi de transfert de connaissances afin d'enrichir la réflexion et de favoriser des solutions novatrices pour répondre aux enjeux du XXIe siècle, au Québec, au Canada et sur la scène internationale. Le Cyrano, c'est un réseau de plus de 230 chercheurs provenant de plusieurs universités dans des disciplines différentes organisées autour de deux grands secteurs, les politiques publiques et le risque. C'est aussi un lieu de rassemblement, un forum de rencontres et d'échanges entre chercheurs praticiens des milieux gouvernementaux et du monde des affaires. Et nous avons aujourd'hui un bel exemple de ce qu'est Cyrano, en réunissant des chercheurs et des praticiens d'institutions financières pour un séminaire sur le financement des entreprises via le marché des capitaux. Donc, ce séminaire est organisé par le Centre des jardins d'innovation en finance d'entreprise de l'Université Concordia en collaboration avec le groupe Finance de Cyrano. J'en profite pour vous souligner en fait certains de nos travaux de recherche qui, au fil des années, ont vraiment porté sur les marchés des capitaux québécois et canadiens, ainsi que de notre intérêt pour innover et créer de la richesse par des modèles de financement performants. Je félicite donc Michel Magnan, fellow Cyrano et professeur à l'Université Concordia, et Brian Campbell, qui est notre vice-président finance pour le programme de cet après-midi. Je remercie aussi les conférenciers, thank you very much for being here today, et les participants à la table ronde. Et j'en profite pour remercier les partenaires de l'événement, donc Desjardins, Québec Bourse et TMX. Je vous souhaite un excellent séminaire. Have a good afternoon.
Merci Nathalie. Michel Magnan, donc fellow Cyrano et professeur à l'école de gestion John Molson, et aussi directeur du Centre Desjardins en innovation de financement d'entreprises, qui co-commandite, si on peut dire, l'événement. Nous avons aussi deux autres partenaires pour l'événement cet après-midi, dont je tiens à souligner la contribution. La Bourse de Toronto, TMX, le groupe TMX, qui a gracieusement accepté d'être sponsor cet après-midi, et Québec Bourse, la nouvelle association des entreprises cotées, dont Louis Doyle est dans l'assistance ici, et le directeur général. Donc, nous remercier ces deux partenaires qui ont permis la tenue de l'événement cet après-midi. Donc, je vais être assez bref, juste pour vous dire un peu comment ça fonctionne. Donc, le premier volet de la conférence sera comme des présentations de différents travaux qu'on espère leading edge, présentations plus académiques, mais sur des problématiques très, très concrètes de financement d'entreprise par différents invités. Le professeur Harry Pandas de l'Université de Calgary, l'école de gestion Asking, le professeur Douglas Cumming de Schulich School of Business de l'Université de York, et le professeur Dennis Schweizer de l'école de gestion John Molson de l'Université Concordia. Et je clôturerai ce volet qui nous mènera vers à peu près 3h15, 3h20. Pause, et ça sera suivi par une table ronde qui réunira des académiques et des praticiens et des investisseurs. Donc, une formule potentiellement dangereuse qu'on testera. Et je vous en reparlerai auparavant. Nos invités à ce moment-là, donc nous aurons Harry et Douglas participeront à la table ronde. Nous aurons aussi M. Ghislain Lemire et M. François-Xavier Souvé, qui sont deux entrepreneurs qui viendront nous exprimer le point de vue des entreprises à la recherche de capital. Et nous aurons aussi le point de vue de deux investisseurs, M. Nicolas Chevalier de Pembroke et M. Pierre Blazing du Fonds de solidarité FTQ. Donc, ça risquerait d'être intéressant. Mention, le ministère des Finances à Québec nous écoute. Donc, si vous avez des messages à passer dans vos questions, ne vous gênez pas. On ne vous nommera pas quand même, donc on ne vous identifiera pas. Surtout qu'on prépare un énoncé budgétaire, là. Donc, j'inviterai dans un premier temps M. Harry Pandas à venir nous présenter ses travaux les plus récents sur toute la question des marchés des capitaux. So, Harry, it's your turn now. Okay. Thank you very much.
my French is a little rusty, so I'm hoping the questions will be in English.
So a point maybe, I've told my panelists that there's no issue that cannot be presented or discussed, and I don't do the specific of their presentations. So there's been no censorship whatsoever. The other thing too, you'll notice we didn't call each other this morning, but it so happens we're all dressed in blue.
Yeah. Okay, so I think okay, yeah, it's a great pleasure to be here. Thank you, Michelle, for the invitation. I grew up in Toronto, so Montreal, I was quite often visiting here, so it's a great city, and happy to be back. The paper I wanted to present, or the research I wanted to present, is a stream of research that I've done on the junior public equity markets. I've also done research on the private markets, but I thought I'd focus today's presentation on the junior public markets and the senior public markets, because that's some of my recent research, and I think has some important insights. So the title that I put here is, Are the Canadian Public Markets Broken? It's a hot topic in the US, but I think also in Canada as well. And most of this research is actually Canadian research. So hopefully you'll find the statistics I present interesting and insightful. So just to motivate, there's been a lot said about the US IPO markets, and in particular, the decline in the US IPO market. So you can see, I've got data here from 93 to 2015. This is from Jay Litter's website, who does a lot of research on US IPOs. And you can see in the 90s, there was a lot of IPOs. And even if you go back to the 80s, there was a lot of IPOs in the US. And it steadily declined since about the year 2000, post the tech collapse. So the question is, well, what about Canada? And a lot of research is done in the US, very little in Canada. And I do focus a lot of my research on Canada, given that I'm at a Canadian university, and what you find is actually a similar trend. So I've got a paper that appeared in the Canadian Business Law Journal, also documenting basically the senior market IPOs, and what you find is also a steady decline in the Canadian IPO market, and this is on the TSX, the senior market IPOs. And basically, some other statistics that are useful. If you look in the 8 years from the year 1993 to 2000, you've got on a per year basis just under 43 IPOs per year. In the recent 15 years from 2001 to 2015, it drops to about 16 IPOs per year. You can see in terms of average aggregate proceeds per year, it about halves in the 15 years most recently. And what you also find is that the IPO size has been increasing. So similar to the US trend, and I'll present some statistics on that later, you're finding that the companies that are going public are actually larger companies, meaning smaller companies somehow aren't going public in as great frequency as they used to. And these are, the proceeds here are inflation adjusted to 2015 dollars. So what we look at in that paper, in the Canadian Business Law Journal paper, with a couple of my co-authors, is we cite several of the reasons in the US that have been documented for their decline, okay? And then we look at, well, do any of these apply to the Canadian context? And I think that sheds some light as to perhaps other reasons why there's such a decline in senior market IPOs. So the common reasons that are cited in the US literature, regulatory overreach. Like I said, in the year 2000 and since, you've seen a big drop-off in senior market IPOs in the US, and a lot of people attribute that to SOX, Sarbanes-Oxley. There was basically too much regulatory overreach. It made public firms costly, companies going public costly. Another argument that's proposed is the US litigation climate. The culture is just very litigious. There's overly aggressive enforcement. And that's perhaps one of the reasons why companies would rather stay private instead of going public, where they can face potential litigation risks. Another argument that you see floating around there is basically some changes in the market structure. So three common things is the reduction in tick sizes, the decimalization, which created issues for small cap companies receiving analyst coverage and having market making activity for the smaller companies. Regulation, fair disclosure in the year 2000, which basically made analyst coverage less likely for a lot of companies, and the global settlement, which basically had an impact on some of the investment banks in the US. So that's another reason why it's cited. I would say the most recent reason, and this is one put forth by Professor Jay Ritter at the University of Florida, is basically fundamental economic change. Meaning the model has become not companies going public, but rather speed to market where they're selling out to other companies. So companies like Apple, Google, Facebook will buy smaller companies and basically create this economies of scope. And smaller companies just can't compete with these larger companies. So their model is now to sell out to these larger companies. So he's hot on this idea. He just was in Calgary actually last week presenting this at a workshop, basically arguing this economies of scope hypothesis, and he believes it's a permanent change, where you're going to see a permanent reduction in IPOs, where companies now want to sell out to these larger companies and get big fast. So what do we do in our paper? We basically pick this apart, the various reasons apart. So what we say is, well, none of these reasons actually apply to the Canadian context, right? We didn't have SOX reforms, or we had some reforms, but nowhere near the stringent reforms that they had in the US with Sarbanes-Oxley. Canada doesn't have as litigious a climate as the US. That culture isn't as robust or vibrant. Canada also reduced the tick sizes, and as we show in that paper, we still have a lot of these smaller and boutique investment banks participating in the Canadian public markets. So there is market-making activity by smaller players, analyst coverage by smaller players. So that argument doesn't really fly. And the final, I guess, Jay Ritter's proponent, this changing fundamental change hypothesis, or economies of scope hypothesis, doesn't really apply in the Canadian context either, because that really holds for the tech sector. And Canada doesn't really have a large tech sector, right? Most of our IPOs are, I would say, manufacturing-based or resource-based, particularly if you're thinking about Western Canada companies. And you saw an unprecedented rise in commodity prices in the 2000s, yet we also still saw a reduction in senior market IPOs. I mean, that should have been the time where we actually saw a big surge in senior market IPOs, but we saw a decline as well. So we basically pick all of those arguments apart and say, look, none of these apply in the Canadian context, yet we're also seeing a decline. So what we put forth is actually a public market pressure hypothesis, okay? So what we say is, there's been a lot of talk in academic circles as well as in industry circles about aligning the incentives of managers and shareholders. But what we say is, well, have we gone too far, where managers are focused so strongly on shareholder interests that they're forgetting sort of the long-term value creation in companies? So basically, what you find these days is investors are much more short-term oriented. You have a lot of activist investors, a lot of hostile investors, and basically CEOs, their job is a lot more high maintenance than it used to be years prior. So you find CEOs claiming that managing all these different gatekeepers and shareholders pretty much takes up most of their time. So we argue, look, we can't run, CEOs feel that they can no longer run the business, presumably why they got into the public markets, but they're rather focusing on the 24-hour news cycle, the next quarterly report, analyst pressures, and all of those things that go along with it. So basically, we argue that management is sort of fatigued with the public marketplace and the stresses that go along with that, and maybe staying in the private market allows them to run their businesses rather than focusing and paying attention to these other external forces. Now, the one challenge is, how do you test this, right? So we don't have a formal test, or it's something that we're sort of thinking about, but there is, anecdotal evidence floating around there. So, there was a recent Fortune magazine article basically saying the modern scourge of public companies is the activist investor. Public companies that go private rave about the time they have now to actually run their businesses rather than having to deal with Wall Street and pressures that go along with that. And then there was a survey, or an informal survey done asking, do you agree or disagree with the following? It would be easier to manage my company if it were private rather than public. And about 77% of the CEOs that were interviewed, and that's a US survey, agreed with that. I guess closer to home and closer to, I guess, Calgary, where I'm at, a few years back, the CEO of Canada stepped down sort of suddenly and retired. And basically, when the interim CEO was asked why was there such a sudden retirement on Randy Erisman's part, and he basically said Randy expressed to a number of board members his fatigue in dealing with the public marketplace and the pressures that go along with it. So the argument we put forward is basically that companies, if they could focus on businesses, might rather stay private, where they don't have to deal with all of these external forces and pressures and the fatigue that goes along with the public markets. There's been some recent media attention around this as well. There was a Maclean's article that actually cited our paper, documenting and looking at sort of the decline in public companies as well. So it is catching, I think, the attention of some of the media. And basically what that article, the Maclean's article, looks at is the majority of listings on the TSX are actually not operating businesses. Instead, there are a lot of ETFs, closed-end funds, and these special purpose acquisition corporations. So you're seeing a lot of operating businesses sort of declining in the public space and a lot less of them going public. He actually finds a cute term for them. He calls them Frankenstocks in the article. So I'm just pulling a couple of the graphs that he presented in that Maclean's article. Basically, he plots or looks at the percentage of Frankenstocks as a share of new IPOs, and you can see, close to 100%, about 80 to 100% in the majority of the years are these Frankenstocks, as he terms them. So you're seeing a real decline in operating companies, IPOs, as well as public companies that are actually going private rather than staying public. And then he plots the number of companies versus Frankenstocks on the TSX. And basically you see that the operating companies, which are in blue, have been declining, and you see these Frankenstocks sort of increasing over the years. So I think it's catching the wind of some of these industry players, the media, which is good, and hopefully policymakers, because I think it's an important issue. Why is it important? I mean, obvious reasons, I think. IPOs enable Canadian companies to attract and raise a lot more capital. What does that mean? Companies are going to invest more if you're raising more capital. That's going to mean more jobs, more tax revenues, so on and so forth. So it's a big growth generator, the healthy and active IPO market. IPOs are actually exits for early investors. So what you find is a decline in the IPO market is usually matched with a decline maybe in funding for entrepreneurial ventures. So those two things are intimately connected to one another. What you find is also a decline in IPOs is sometimes often matched with an increase in acquisitions. Now, acquisitions might be okay, but what you find in Canada is that acquirers tend to be large foreign corporations. You can argue whether that's good or bad. You might lose, distinctive culture and character. I mean, think about, a very extreme example, Apple in its early days, and Steve Jobs, who was very bright and had a very distinct character. If he had sold out rather than taking his company public and growing through the public markets, there would maybe no longer be an Apple. You might have a lack of revolutionary new corporate giants as well, right? So you might have this oligopoly-like thing, consolidated industries, where you might not have a new breed of companies coming into the marketplace. And I think, the solutions to Canada's well-documented problems with innovation and productivity are also tied to a healthy IPO market. So I'd argue that as well. So I think having a healthy, vibrant IPO market is very important on several dimensions. So other big trends in the US. Well, yes, IPOs are declining, but if you look at small cap IPOs versus large cap IPOs, the drop off seems to be heavily weighted towards small cap IPOs. So in the 90s and before, you saw a lot of smaller companies going public. Now you are still seeing companies going public to some degree, but the majority of them are larger. You're seeing a big drop off in the smaller cap IPOs. And again, this is pulled from Generator's website. So there's some research that have been done on the junior public markets, just tying back into the small cap IPOs as a way to incentivize or find companies to go public and reach out to public investors. So there's a paper by Silvio Wismera, who have done some work with Cagliari and Ritter, again, in looking at Europe's junior equity markets. And they basically found that they've set up a number of these junior public markets, and they've not had a lot of success with them. So since 1995, 11 were set up and 5 are only in existence today. What they find is, they produce very weak long-run returns, so they don't have very good investor performance. There's severe liquidity issues. They're geared more towards institutional rather than retail investors. And few firms actually graduate to the senior markets from the junior markets in Europe. So I would sum the regulatory regimes of these European markets in 3 ways, and actually these authors define these terms. Sequential, which is basically regulation by Securities Commission, Sectorial, also regulated by the Securities Commission, but it has a focus on maybe a particular industry like the tech sector. And demand side, which is exchange regulated. The best example of that exchange regulated is London's AIM market. So it's actually not regulated by their securities regulator, it's regulated by the exchange. So they argue that that's sort of the best model, although they also still find that AIM produces very weak investor returns over the long run for investors. So I think in Canada we've got a really unique and perhaps not marketed well system, the junior exchange here, right, the TSX Venture Exchange. And although we've had a drop off in senior market IPOs, what you find is actually a pretty vibrant IPO market on the TSX Venture Exchange. So I pulled this data from the Financial Post from 93 to 2005. And yes, there's been some cycles. And you could see in the early 2000s, there was a drop off in IPOs, and most recently as well. And I think the TSXV is trying to put out some initiatives to help that. But what you find is, you've got in some years near 250 IPOs, right? So although the senior market IPOs are down, even recently, if you look at sort of 2007, 2008, where there was a lot of problems in the world's capital markets, you had a lot of IPOs and companies going public on the venture exchange. So again, I'm excluding, ETFs, REITs, and income trusts in this graph. So that would even raise it a lot further. And I've broken it down to regular IPOs and capital pool companies, and I'll come back to that in a moment. If you compare it to the European junior equity markets from the Silvio Vismera et al. Paper, what you find is, quite a healthy market comparative, right? TSXV, you've got just over 2,000 IPOs over the period 1995 to 2009. The closest that comes to that is London, but you could see that's really concentrated in a couple of years. And of late it's dropped off quite a bit as well, whereas ours has stayed quite healthy. So I think this is a really good outlet for early stage companies to raise capital from public investors, and I'll come back to some of the implications of that in a moment. And this is basically for a paper that we wrote in a book on the Handbook of Research and IPOs. So what is the capital pool company? Just very briefly, it's a two-stage process. You've got this CPC. It's basically a blind pool. You have some founders that put some money, pull some capital, and then they've got a specific amount of time to go out and get a deal and do a reverse takeover. So it's an alternative way for a company to go public. That qualifying transaction is oftentimes a reverse takeover. So a private company does a reverse takeover with this blank or blind pool, and it allows them to list and have an IPO on the venture exchange. So you would think that CPCs, blind pool, you're giving basically a blank check to these founders to go out and find a deal. You would think there would be a lot of fraud associated with this. And if you look back at the history, in the US, they toyed with these blind pools in the 80s, and there was significant fraud associated with that. And there's several studies that showed that. So the US regulator tried to clamp down on this. They put in this Penny Stock Reform Act, which basically shut down the market. It was too much heavy-handedness from the regulators. It made it too costly for companies to go public. So when it was shut down in the US, some of these guys came up to Canada and tried to do this in Canada. Particularly, they started it in Alberta. So there was significant fraud, no surprise, in Alberta as well in the early days. So the regulators put in a moratorium. They said, look, we've got to put a stop to this. We want to look at this and come up with some proper regulations. So they initiated this CPC program. Back then it was called the JCP program. What I liked and what we look at actually in this paper that we have in the Financial Analyst Journal is they got the regulations right, meaning they were able to balance the needs of investors and protection for investors, as well as the need for companies to find low-cost ways of going public. So they put VC-like restrictions on the founders, and they had some good protections for the shareholders where it wasn't too onerous and costly for the company. So just briefly, initially you could not exceed 500,000 in total post-IPO capital. So basically that's been changed of late to 2 million. Founders could draw no salary or perquisites. 70% of the proceeds had to be used for the evaluation and identification of the reverse takeover transaction or the qualifying transaction. They had to find the QT within a certain amount of time. And seed shares had to be escrowed. So the founders couldn't do these pump and dump schemes, right? They actually had to have their money in there for about 3 years after the company went public. They had protection for shareholders as well. Initially, it was restricted geographically. You have to have these registered investment dealers taking part on know your client roles, active investment banking community participating, certain amount of shareholders. I mean, the irony is that years later, the US SPAC, the Special Purpose Acquisition Corporation, which came about just a few years ago, takes a lot of the features of the CPC program. So, in the early days, they went very heavy-handed with the regulation, shut down the market, and years later, now they came up with these SPACs that are very similar. Okay, I'm really cutting it short, so let me fly through it. Basically, the gist that we find in that paper is the regulations really cut down on fraud. So, Douglas has a paper, and he looks at fraud in several markets, and you find that the CPC fraud was pretty much on par with what you find in those other markets. So the regulations really got it right, and it worked. The goal of the TSXV is to graduate firms, right? So although you have few senior market IPOs, you do have a lot of graduations from the venture exchange. So that's very different from some of those European markets. So that's been a very healthy influx of companies to the senior market. So I think that underscores some of the decline in TSX IPOs. It's unique, the regulatory structure in Canada. You've got the TSXV regular IPOs that are regulated by the Securities Commission, and the CPCs that I'm referring to are actually exchange regulated. So we've got this nice test in Canada where you can look at exchange regulated versus securities market regulated. And I'm almost done here, so just give me one more minute. So we have a recent paper, Does Spending Time in the Minors Pay Off? Sort of a cute title, sports analogy. And we compare the long-term performance of companies that basically go to the TSXV with a regular IPO, grow there and graduate to the senior market versus companies that are privately VC-backed and have a straight IPO. So we're comparing public venture capital versus private venture capital. Various reasons why you might think graduation should perform better. Essentially, the story is you learn how to be a public company and all the stresses and the know-how that you learn from that. You learn how to deal with shareholders, analysts, regulators, public market governance requirements, media, so on and so forth. What do we find? We find basically that these TSXV IPOs that graduate to the senior market actually outperform the VC-backed firms that have a TSX IPO. So there is importance for sort of this growth on the public markets, and also speaks to the benefits, I think, of the venture exchange. Interestingly, with CPC graduations, we find they do well when they're on the venture, but when they graduate, they actually don't do that well, which sort of suggests that the exchange regulated model might not be as good as the model that's regulated by the Securities Commission. Okay, so there seems to be a difference there. And we're pretty much done, so I will quickly show my final thoughts here. So Canadian IPO market is down, similar to the US, but we argue for different reasons, right? I think that's an important issue for policymakers because it has implications for investment, growth, and so on. Smaller senior market IPOs are down by more, obviously, but I think that venture exchange, which we should, I think, promote more, and I think that's sort of on their to-do list to do that, allows for smaller cap companies to find alternative ways of financing. Important where we don't have a vibrant and robust private venture capital market in Canada like the US. And I think that also has important policy recommendations in sort of promoting and coming up with, adapting and coming up with regulations that work for the small cap companies on the venture exchange. And that's it. I know I'm out of time. I'm a little long, but yeah.
Thank you.
Thank you.
So thank you. Our next speaker will be Douglas Cumming from Schulich School of Business. Douglas has a Montreal connection. I think you have a BCom from McGill.
Yes.
Okay.
We're trying to close this for you, Doug. Okay. I know that you French better than mine.
Let's see. Just need to find an extra. I'm a PC user, I confess.
Yeah.
Okay, let me. I'm a PC user too, so and I don't have.
Usually there's an X. Oh, no, there's the X. Okay.
Okay.
I'm in Mac. Yeah. So the red thing there. No.
The red
sorry.
thing,
Yeah. That's just I don't see the X in there. Usually there's an X. Yeah. There we go.
Okay, and yours would be which one?
Yeah, it looks like
This one. Okay. Is that the one? Yeah.
Yeah.
Okay, and. Okay, there you go.
Terrific. So thanks very much for the opportunity to be here. It's a tough act following Ari. He speaks so fluently and quickly, and he's a tough guy to follow. Very nice guy. I've worked with him on a few projects, and nice to catch up again. Nice to be here in Montreal, and I know when Dennis follows me, he's going to do a much better job than me as well. So I'm sandwiched between two great speakers. So, but I appreciate the chance to be here. This is a bit of a summary, some of the work that I've done with a few new things added, and it's in particular focused on labor-sponsored venture capital funds. And Michelle had introduced me to someone from FTQ, the Solidarity Fund, just before the start of the presentation. I thought, oh no, I have the wrong set of slides for this audience, so I'm a little bit nervous, admittedly, about presenting this work. So my take on our labor-sponsored venture capital model in Canada, some of you may know, is not 100% popular with everybody. And I'll just sort of summarize quickly. This is at least what we think the data are telling us is that the labor-sponsored venture capital model is a bit problematic for a few reasons. One of those is highlighted by this slide that we put together a ways back, just simply taking data from globe funds. And so if you go, you could even do this right now if you're bored of what I'm saying. You could log on to the net, go to globefunds.com, and you get historical information on fund returns. And the vast majority of funds deliver returns that are roughly around zero, many of them in the negatives, and the fees charged for those returns are quite high. So they are frequently having management expense ratios in excess of 5%, which is well over double the typical management expense ratio for most mutual funds. And if you haven't seen this picture before, so what it's showing us are the returns. So the US venture capital, small cap Canadian equities, large cap Canadian equities, then a 30-day T-bill index, which is the purple line, and then the red line is the labor-sponsored venture capital fund index, which at the peak of the internet bubble, which burst, as you probably know, on April 14th of 2000, the peak of the bubble, the labor fund index creeped above the 30-day T-bill index, and then it's since gone down. And if you extend this up to today, it's basically exactly, well, almost exactly at zero. And so the cost of the labor fund program is large. So in foregone tax revenues, people have estimated it to be in excess of $1 billion a year. And the economic rate of return, as would be evidenced by a picture like this, is not very large, arguably close to zero, which is a little bit like paying someone to dig a hole and then fill it up with the same dirt again, so that there are jobs created as a result of that, but the long-term economic sustainability of that is not large when the tax incentives are removed. And so I've had, in the past, in presenting pictures like this one, have had various responses, some of them not so kind, directed back towards me. Like, remember someone once said, how could I be so stupid as to compare venture capital to T-bill returns, because it's not the same thing. So that's sort of the whole point, that it's sort of shocking that one would have those two things on the same slide. But nevertheless, that's what the data are telling us. And as you, if you don't know me, I'm sort of a data guy with few opinions other than reporting just what the data are saying. So this is what the data are telling us. We recently tried to upgrade some regression evidence on looking at the impact of government programs on spurring more or less venture capital. And in a paper published about 10 years ago or so, we had evidence up to 2001 where we ran some very simple regressions that looked at numbers of venture capital investments. So I did this for Ontario, Quebec. The way it was reported by the Canadian Venture Capital Association with data from McDonald and Associates, was they grouped the maritime provinces together, which I've done. And then the prairies, where I grew up in Winnipeg, so they mixed together Manitoba and Saskatchewan, then Alberta and British Columbia. So these are numbers of investments. We're able to extend this not too long ago up to 2011, because some of these things like incorporation data are harder to get at. And we updated some of these results looking at the basic question of, well, does introducing programs like the labor-sponsored venture capital program, does that spur more venture capital, or does it have a zero effect where increasing one type of venture capital results in a reduction, a commensurate reduction in another type of venture capital, or does it have a lowering effect? And one reason why it could possibly have a lowering effect is that institutional investors that are competing in a marketplace with private, or I should say government-sponsored, tax-subsidized venture capital might overestimate the extent to which there's government-sponsored venture capital. If they're risk-averse, they might overestimate that. And as a result of introducing a government program, private investors that are competing with government funds that might overpay for deals and lower returns in the marketplace might be less incentivized to set up private funds, just as that picture would imply. And if you look at the numbers up to 2011, you see, for example, some very sensible things that venture capitalists care about: exits. So they want capital gains. You don't invest in venture capital to get dividends on equity or interest on debt. You do it to get capital gains, like the selling out in an IPO or an acquisition. And so the capital gains tax rate, the higher the rate, the less the venture capital. We know this from data from the US and all around the world, and you see that happen very clearly in Canada. Then if you look at these labor-sponsored variables, you see that the effect has either been neutral, or with data up until 2011, it's even been negative. So the positive impact that we might have hoped for from such a program doesn't appear to be there, and if anything, there seems to be a crowding out effect happening in the data. And we did this in dollars, so it's numbers, same results in respect to dollars. So what can we say about some changes that have happened in Canada? So back in 2005, they announced a phase out of the labor-sponsored program in Canada. That with lobbying, that was pushed to 2010 and then 2011. They instead in Ontario brought in something called an Ontario Venture Capital Fund Program, which was 90 million, another 29 million to an innovation accelerator fund, 205 million to the Ontario Emerging Technologies Fund. There has been a federal government program of $50 million. And so in looking at those programs, we thought to ask a real basic question: well, what does it do? Is it enough? And so what we sort of came to the realization just by running some comparison numbers to some leading jurisdictions just south of the border. So if you compare to Massachusetts or to California and compare the amount of venture capital per GDP in those jurisdictions relative to what we see here in Canada, or pick a province that you might like, you see that the numbers that are needed to make venture capital per GDP at a comparable level to those places is actually not getting us very far. So it's nice to see this graphically. So here's Quebec, here's Ontario, the Canadian average. So these are venture capital per GDP. Then you look at California and Massachusetts, much higher. And you can ask the question, well, given the size of these other stimulus programs to increase venture capital in places like Ontario with the new government model. How far has that gotten? So here's the expenditure in Ontario, what's currently there. Then the federal ones over these years, 11, 12, and 13. And then what we did is to say, well, what if we wanted our level of venture capital to be the same as it is on a per GDP basis in Massachusetts or California, the two leading jurisdictions in the US, you need substantially more per year. And how much more? Well, I gave the exact numbers. It would need to be about 4.4 billion more per year to get us to those levels. And so we think that these stimulus programs that I put up here, the 90, 29, 205 million, or even the 500 million are like a drop in an empty pond. So that's not going to get us very far to where we think that we might go. So you might then get to a bigger question, is to say, well, we don't only, as governments, we don't only spend money on venture capital, we spend money on other things as well. And so a couple of years ago, for the government of Ontario, I did a report which looked at where we got access to tax data. So it was all very confidential and hush-hush. They gave us access to tax data where we signed very strict confidentiality agreements saying we wouldn't do anything with these data. And we presented this report to the government of Ontario where we looked at the amount of money spent per year on government support towards businesses. And this was totaling, say if you take 2012 for example, the Ontario government spends over $4 billion per year supporting businesses. So you could ask the question, well, who gets the money, right? So we know a little bit goes to venture capital, just a little bit, about 100 odd million goes to venture capital. So what happens to the other, 4 billion? And what we saw is that if you're, sorry, this is cut off at the bottom. We pull this down a little further. And so I realize you can't see it. I can see it up here. So I can just tell you the red ones mean you have $20 million or more in sales, and then it goes down. So the blue ones are if you have less than 50 million in sales, and then 50 million to 2 million. You get the idea. So this is on a sales basis. So this is here the average amount per firm that you get. So if you're bigger, you get way more money from the government. So the more, so if you have 20 million in sales, on average, oops, I did something there. On 20 million in sales, you get way more money from the government the more sales that you have, which is crazy, right? And then you go further and you see evidence here. This is on a age basis. So if you're less than 2 years old, that's the blue ones. And then here, if you're over 10 years old. So you get way more money on average if you're older. So you get more money if you're bigger and more money if you're older, which is completely the opposite of what a overall scheme should be for supporting entrepreneurship and developing new firms. And in fact, resembles more the lobbying model of providing constituents with more money if they've been around longer and can reward you as a politician for giving you such funds. And so when we present this report to the government of Ontario, if you might have seen this in the news, come out earlier this year, we presented it to them in 2014. And what did they do? They buried it. So nobody saw this report. And earlier this year, I informed the C.D. Howe Institute that a co-author of mine got access to this information because I told him about it, or he knew of it, I guess is a better way to put it. So he made a Freedom of Information access request. And I mentioned this to someone at the C.D. Howe Institute who appears to have released that information to the media, and shortly thereafter it showed up in the newspaper, so which is why I'm allowed to show you this here today. But it's funny how the dissemination of information happens. The CDL Institute politely informed us that there was absolutely no connection between the timing of this information, even though this report was buried in 2014. It had nothing to do with them, apparently. But nevertheless, a good thing happened that it became public. So this is quite I guess, an unfortunate thing about how public policy money is spent in Canada. Sort of an eye-opener. So for the small firms, it makes you ask the question, well, who's looking after them, right? So we don't have enough venture capital. Government monies go towards big businesses. There's this long history of unusual support programs for venture capital in Canada that when you talk to other folks from other countries, they basically laugh at us for what we have done. So you could say, well, will institutional investors step in to fill the void? And possibly not. There's you talk with some institutional investors, they get very upset about the poor history of returns, to the extent that institutional investors, like some of the pension funds in Ontario, are interested. They've decided to do it themselves, which isn't necessarily the best thing to do, that we know from other research. We have an ILPA that seems to have more of a U.S. mandate, despite having some presence in Canada. You might say, well, do we have other mechanisms that could help pick up the slack, like crowdfunding? Is that going to help us get there? Well, it's might be appropriate for some businesses, but perhaps not all. Although that's certainly growing exponentially. That gives us some hope of some new things to look forward to in the future, but there's still other things that could be done. So we have unusual history with public policy towards venture capital in Canada. The degree to which governments have put in other programs like this Ontario Venture Capital Fund goes a teeny way of where we need to be to get to the U.S. levels of, say, Massachusetts and California. It would have to be huge order of magnitude more than what's currently there. Monies are spent towards, government money is spent towards supporting businesses, but shockingly, well, maybe it isn't so shocking, but as far as I'm aware, this first time this information has ever been made public, is that the money, you're more likely to get money, and you're going to get way more money if you're older and bigger. So if you're new and young, nobody's looking after you, apparently, which is sort of sad to say. So I don't mean to be so negative today. I just, it's hard to sit between Ori and Dennis, and hopefully that didn't come across the wrong way. I just remembered I'm being filmed here. So I was recently nervous. Hopefully we can burn the tape or something. Okay, thank you.
Thank you. It's okay, you talk about bad Ontario public policy. Now, Dennis Schweizer from the John Molson School of Business will be presenting his latest research.
Okay, thank you very much for the invitation, Michelle. I'm very happy to present some of my latest results from the private equity industry. And as we academics, we always try to look at past data. So my comparison is we look into the inner mirror of our car and try to predict the future. So as an academic, I couldn't completely resist. Therefore, I split my presentation into two parts. So the first part is also looking into the past, what happened in the private equity industry, like recent trends. And then in the second part of my presentation, I try to use like what we learned from the past or thinking out of the box and ask some questions. what are the consequences for the future private equity markets, not only in Canada, but also all around the world. And two trends that I observed in the recent past was, one are the so-called buy and build strategies that were frequently used by private equity funds. What do I mean by buy and build strategies? Buy and build strategies are strategies where the private equity firm conducts an initial buyout and has a portfolio company, and then subsequently purchases more and more companies and combines those companies to a bigger company. That's called buy and build in the private equity industry. And what we figured out, that the numbers of buy and build strategies in the private equity increased a lot, from about 20% of the deals in 2000 to more than 50% in 2012. So buy and build strategies become more and more popular. But there's not so much research done on the buy and build strategy in the academic literature. So the literature we found so far is highlighting the bright side of buy and build strategies. It's not the quick flipping of companies you buy and sell to have high internal rates of return, but it's more about building a company, a sustainable company for the future. That was highlighted in the literature we have seen so far. But I would also highlight the dark side of the buy and build strategies, and I show you some evidence in a few moments. So what is the downside of it? We have seen in 2003, the average holding period of portfolio companies was about 3.3 years. But within 2012, the average time was 5.3 years, which is an increase of about 60% in the holding period. Is it good or bad? At least it increases the liquidity of the portfolio companies, and that's, from our understanding, the dark side of the buy and build strategies. So the more buy and build strategy you apply in a private equity fund, the longer is your capital tied up into the investments that you need to build this kind of bigger company. And our idea is, if you look at bonds, and bonds having a longer maturity have a higher duration, and with this higher duration you also have more risks. That's the same for the private equity funds here. If they have longer holding periods for their investments, the risk of those investments increases. And that's one of the major concerns for the general partners, as well as for the limited partners. And what you can see there, the longer the holding periods, typically you see lower internal rates of return. Okay, I skipped that part to save some time here. We used a large data set of about 7,500 portfolio companies that we analyzed based on the Sapphire database. So first, to highlight this kind of buy and build strategy, what we did is the following. We checked for portfolio companies that were purchased by a private equity fund at that point in time. That's the year, and these are the years later and the years before. And what you have here is the annual likelihood of doing an acquisition. And we have here those companies that were acquired by private equity funds, and these are matching companies which are basically the same. The only difference of those companies are that they were not acquired by private equity funds previously. We can see here that those companies that are not acquired by private equity funds, they have a very, very low likelihood of about 1% of doing an acquisition in the future. Whereas those companies acquired by private equity funds, they also have a higher likelihood, higher likelihood in the past of being active in the merger market. But then after the private equity fund buys this company, and that's the capital T here, you can see a jump of the likelihood. And you can see here, this jumps about 100, it's almost doubling, it jumps around 100%. So after the private equity fund purchased this company, then the likelihood that another company is purchased is about 16% per year. So that's some evidence. Once the private equity funds acquires a company, there is this kind of boost of acquisition activity. So the question is, are the buy and build strategies good or bad? So in terms, are they paying off or not? So therefore I have some multiple comparison to give you an indication how much money you make how much money, or what's the multiple increase if you do a buy and build strategy, or if you have a regular company that you purchased and that you sell later on. So what we're focusing on is the enterprise value divided by EBITDA multiples. And here, this section is about the entry multiples. You can see here, the entry multiple on average is about 10.4% if you're not doing a buy and build strategy later on. Buy and build strategy, the multiple is virtually the same. And the difference here is about 0.3, and it's not statistically significant, meaning basically if you follow a buy and build strategy or not, basically you pay the same price for the company. Here we also adjust about the average industry multiple, and you can see here that no matter if you're doing a buy and build strategy or not, you're paying an excess premium of about 2 in terms of the multiple if you're a private equity fund. What's more interesting are the exits. So if you check the exit multiple when you sell the portfolio company, and we focus on the row 1 here, you can see here that you have a multiple increase of just 1. But whereas when you're following on a buy and build strategy, your multiple increases from roughly 11 to 15.5. So you have a 0.5 multiple increase. So and if you check the difference between both, you can see that you have statistically significant higher multiple of about 4 if you follow a buy and build strategy or not. So that's a huge difference. So we can see if you follow a buy and build strategy, it really pays off in terms of the multiple expansion you can have. So what's the downside? What's the downside of it? The downside is the following. We focused here on the holding period, and we compared regular private equity deals where you don't follow buy and build strategy with the buy and build strategy. And we can see here, if you have a single, only one add-on acquisition, so you have a portfolio company and you only make one add-on acquisition, the average holding period to non-buy and build strategies increases about 16%. If you're following multiple acquisitions, every multiple acquisition increases the holding period about 20%. And that is what I talked initially about, is the dark side of the buy and build strategies. So what we find is that the more buy and build strategies are applied, the longer are the holding periods for those investments. So that's the past, what we observed. Now I want to have a look into the future. And this nice picture came from the Economist, and it shows the Bavarian establishment. So what do I mean about that? I have a little cheat sheet here, and I looked up the big 4 private equity fund, KKR, and I checked for the age of those of the managers or the founders of those private equity funds. And Kravis is about 72. Kohlberg I couldn't find. Roberts is 73. Steve Schwarzman is 69. Rubenstein, Conway, Danelio, the founders of Carlyle, are 67, 67, and 17. And Leon Black, the founder of Apollo, is 65. So all of them are like in their golden ages, right? And what else? They are running those industries for about 30 years. So if you compare their tenure in the industry of 30 years subsequently with mutual funds, with hedge funds, with CEOs of publicly listed companies, their tenure is much shorter. So that's my question here. So what does it tell us for the future? Are they running out of innovative investment strategies, or are they still focusing on those kind of buy and build strategies they did for ages? And if they do so, what are the consequences? Okay, so what we find is if we look at the stock prices of the big 4 companies, which could be a good predictor of the future value of their investment strategies they're now currently focusing on, you can see here all big four private equity funds had negative stock returns in the past year. We find that Blackstone, KKR, and Carlyle lost more than 20% in the last year. Blackstone, Apollo, and Carlyle are even trading below their IPO price. So what does it tell us? So is it the case of competition? Are there more private equity funds that come into the market? Or are they just running out of opportunities? If you see so many buy and build strategies, maybe all of the good companies are already bought and there is nothing left to purchase, or the price that you purchase, the price you need to pay if you find a good company, is increasing and increasing, similar to what we see in the public stock markets, that after this kind of long-lasting bull market, all of the nice companies are already priced at a comparably high price. Okay, so just checking the market. If you see companies in terms of enterprise value of below 100 million, 100 to 500, and over 500 million, you can see here the percentage that was acquired by private equity funds here. You can see here of those kind of mid-sized companies, we had about 7% purchased by private equity companies, and now you see it's close to 25%. So private equity market, the private equity funds are basically dominating this kind of market here. As well as for the bigger companies, it was about 2%, it jumped over 10%. So you can really see that the private equity funds are buying more and more of those privately held companies. And what is coming on top of that? Preqin calculated that the dry powder, meaning the money that is committed to private equity funds but not yet used, is about 1.3 trillion. And if you add to that the leverage they typically impose of one, so running the Mickey Mouse math here, we add up by $3 trillion, which is almost 70 to 80% of the complete acquisitions we have seen in the previous year. So there's also a lot of money waiting and eager to be invested. By the same time, we also see new kids on the block, like Chinese State Bank, Sovereign Wealth Fund, and also the Ontario's Teacher Pension Fund. It's becoming more and more active buying privately held companies. So the competition for those presumably undervalued privately held company is getting more and more intense. So what are the consequences for the future? So one could be that the private equity companies buying privately held companies need to take on more risks, meaning they buy riskier companies, or they buy it at a higher price, which presumably reduces their expected return in the future when they sell the company. What else do we see? We see kind of a low regulation in the private equity market. We have a lot of dry powder, and it could be, and this is like a question that I would like to ask is, could this also create a bubble in the private market as we have seen in the housing market? What else? The buy and build strategies also impose a comparably high leverage. So when interest rates increase, or what we see right now that in the US interest rates already started or are expected to start to increase, same as in Canada, if the interest rates increase and they need to refinance, the private companies need to refinance at some point in time, this could also increase the risk for those companies that they are either unable to refinance, or the amount of interest they need to pay might be too high and eat up the profits. What else do we see? We have an intensive usage of the buy and build strategies. We have this kind of conglomerates, and we have more concentrated risk in a lower number of companies. So the risk is more concentrated in a fewer buy and build artificially designed companies in comparison to just spread. If you just spread the risk over more companies. And also what we see at the end is that the holding periods, as I highlighted before, are increasing a lot. So that means that the liquidity of the private equity funds also increases, which basically increases the risk for the limited partners as well as the general partners in those private equity funds. Okay, perfect.
Thank you.
Thank you so much.
Merci. Je vais clore la première section. Je remercie nos conférenciers. Thank you to our presenters. Pour ceux qui ont des questions, Douglas et Harry font partie du panel après. Donc, je suis certain qu'il y en a qui auront des questions pour eux. I just told the crowd that if they have questions, you're staying on for the panel discussion afterward. So be ready. OK. Ce que je vais faire maintenant, pour clore cette session, c'est vous présenter les derniers travaux que le groupe Finance à Cyrano a pu faire sur la question du financement d'entreprises. Je vais être très bref pour respecter l'horaire. OK. So, on vient de terminer une étude sur les marchés financiers québécois. Et if you don't mind, I'll speak in English because actually I did my slides in French. So for the benefit of our speakers, if you don't mind, but the slides are in French. So we just completed a study on the Quebec financial ecosystem, which was a follow-up of a previous study on IPOs. And actually, Harry quite summarized what we had done at Cyrano on IPOs in terms of the decrease in the number of IPOs in Canada. So we'll briefly talk about the context of what we're doing at Cyrano, our principal findings, and where we're moving from there. So what we found before, and this is actually something that was picked up to some extent par un groupe de travail de l'Ordre des CPA et de Finance Montréal sur le déficit d'inscription, that there's a dearth of scarcity of IPOs in Canada, but also especially in Quebec. And so there's been some concern in the financial community in Montreal about this issue. Un rapport a été émis récemment au mois de juin sur la question avec des recommandations pour le ministère des Finances. So a report was issued to the Minister of Finance about this task force. So our study was previous to that task force report, but we essentially reached more or less the same conclusion. So we need to do something if we want more IPOs, and there are potentially economic benefits to a society to have more IPOs. And what you mentioned about the venture exchange is actually quite interesting. What we just did recently is, with our latest report, is do an overview of what's being done. Then it's talked about the private equity market. We look at the VC market, which also Douglas has looked at. What we see essentially is that the VC market in Canada has been picking up recently, but the returns have been kind of negative for more than a decade. And the US too, but the US has picked up. What happens, we're doing better, but the scales, and I think Douglas' presentation really summarized the scales we're talking about. Canada is not doing that badly, but we're besides that elephant in terms of VC. So even if we're doing better, like the gap is almost impossible to go beyond. So that's an issue we're facing. And what the research shows also in terms of VCs, that the returns obtained by VC funds are highly correlated with the size of the VC fund. The problem in Canada is a small market, and US VC funds, it's easier for them to reach a critical mass. And that's actually a problem in Canada. We don't have that many players with a critical mass. And also in the US, you have specialized funds, which build up expertise. And the essentially boost innovation. It's a bit more of a challenge in the Canadian market to get such funds with critical mass expertise. So we're facing several challenges in the Canadian market. In terms of the private equity market, also the Dennis presentation touched upon some aspects. What we found actually is that PE investment in the US has been quite profitable over the past 2 decades. But is the future going to be the same? That's the question, because of the reason you mentioned. So we basically reached similar conclusion. And one thing also that we found out is that the US market for VC and private equity, there's a class of professional managers that essentially go from firm to firm to essentially put these firms on level. And then they leave on and they move to another firm. And what we've observed is that network of managers is critical to the success of VC-backed firms or PE-backed firms in the United States. But the market in Canada is not so developed. It's starting. We have such professional managers in Canada, but in very small numbers. And it seems it's a critical ingredient to have a PE VC market being productive and returning good returns. What we find about Canada, Quebec, it's summarized here. Some issues, and there's lots of differences between Quebec and Ontario, actually, which is kind of interesting. Like the exact market in Ontario in terms of raising capital is huge. And in Quebec, it's kind of more like emerging. So there's a big discrepancy between Ontario and Quebec in terms of the importance of the exempt market. Of course, we have the tax-sponsored funds, like the Fonds d'Action, Fonds de Solidarité, Capital Régional Desjardins in Quebec, which Ontario doesn't have. There are, it seems, pro and cons to their presence, but there's two sides. But you mentioned the involvement of the Ontario government in VC. The Quebec government actually has been a lot more involved than Ontario, with some success in some respect. But the level of investment by the Quebec government has been substantive in the past 10 years with many initiatives. One thing also that is kind of interesting is that the wealth management is becoming a lot more concentrated. And we've seen the disappearance of many boutique investment houses. Like you mentioned, there existed in Canada, they still exist, but in lower numbers. And that has implications for the dynamism of the ventures exchange and the IPOs in that market. Interesting conclusion here. In Quebec, when we talk about private equity, we talk about capital d'accompagnant. So we accompany the entrepreneur. That seems to be a way of life for many institutional investors. While in other settings, often the private equity investor take over control and managerial responsibility. So there is a difference also in the way PE is done by Quebec players. That's something we found. So we have several recommendations in our latest reports. Je vais le faire en français, je vais revenir en anglais. Le point essentiel qui nous est ressorti, c'est que le domaine de l'innovation, parce qu'en bout de piste, le gouvernement se préoccupe de ça. Pourquoi? Bien, pour créer de la richesse. Puis on va créer de la richesse comment? En ayant de l'innovation, en ayant des entreprises, donc, qui sont allées chercher du capital pour faire de l'innovation. Et ce qui ressort clairement, c'est qu'il faut avoir une perspective mondiale, tant du point de vue des entrepreneurs, des entreprises, mais aussi du point de vue des investisseurs. Il faut que les investisseurs soient au courant de ce qui se passe comme tendance à l'échelle mondiale, si on va faire les bons choix et donner les bons appuis aux entreprises dans lesquelles on investit. So a world perspective is important in VC. To be aware of what's abreast of developments everywhere in the world and provide the right support. And you need to facilitate the conversion of knowledge into innovation. And this is one place where Canada is lagging in terms of how do we convert everything that goes on in universities into innovation in the business sector. It's not so obvious. Ontario has Mars, which is attempting, but this is a major challenge. The need for the state and the ecosystem to be interactive with one another. And we have other dimensions. One aspect which we found, and you touched upon the regulations, which seems to be an important ingredient, potentially. One thing I found out, and I'm discussing at the Groupe de Travail, the task force, is that if you look at the U.S. Securities and Exchange Commission webpage, they state their mission. And their mission is to protect investors, maintain fair, orderly, and efficient markets, which is fine, and facilitate capital formation. And one question asked, and we wondered at the Groupe de Travail, and I'll leave you with this question. In Canada, who is in charge of facilitating capital formation? Do we have a vision, and do we have a promoter for this? It's not so obvious. I'm not saying that the SEC does it well, or does it, but it's in their mission. So it's part of their thinking. In Canada, who's that player who has that responsibility? It seems that there's potentially a void there. So this is our recommendations in the latest report. And we're now working on the I would say, the value chain between capital, innovation, and commercialization. So that's our current project. Donc, je vous remercie. Je veux respecter l'horaire pour finir à 17 h. Donc, on est arrivé à la pause. On reprend dans 15 minutes avec notre table ronde. Donc, je vous remercie. Il y a du café à l'extérieur. Merci. Donc, on est de retour. Je vais juste brièvement présenter nos panélistes cet après-midi. Donc, je vais commencer ici avec M. Blésing. Donc, Pierre Blésing, qui est directeur principal au Fonds de solidarité FTQ, responsable notamment de la vigie au Fonds. Merci. M. Ghislain Lemire, qui est, un instant, j'avais fait des petites recherches biographiques. Oui, c'est ça, qui est PDG de Urban Immersive. Vous allez voir sur leur site, c'est quand même intéressant ce qu'ils font. Donc, qui, ce que j'ai compris dans les médias numériques. Oui, c'est ça. Et qui est inscrit, son entreprise est inscrite à la bourse de croissance, donc Toronto Ventures. Ça va être intéressant, c'est assuré d'avoir une personne sur le Ventures, mais une personne sur la bourse TSX. Bon, Harry Pandes, que vous avez déjà vu, de l'école de gestion Askin à l'Université de Calgary. Nicolas Chevalier, qui est associé et chef du risque. Oui, c'est ça. Chef du risque chez Gestion Pembroke, qui est un gestionnaire de portefeuille. Et qui est un ancien de la Caisse, je pense, de dépôt. Oui. Monsieur François-Xavier Souvé, qui est PDG de Lumen Pulse, une entreprise qui a fait un IPO, premier appel public à l'époque, très médiatisé en 2014. Et donc, qui a affaire à toutes ces parties prenantes, l'AMF, les analystes, ainsi de suite. Il va nous parler de son expérience. Et en même temps, c'est le PDG et fondateur de l'entreprise. Et Lumen Pulse, pour ceux qui ne le savent pas, c'est un leader dans le domaine du lait. On pourrait en parler un petit peu. Peut-être qu'on aurait besoin ici. Oui, en termes d'éclairage, là.
Il y a beaucoup d'appareils actuellement.
Ouais.
Beaucoup d'appareils.
Okay. Et finalement, Douglas Cumming, que vous avez déjà vu, qui est de l'école de gestion Schulich à l'Université York. Donc, ce que j'ai dit à nos panélistes, c'est on va commencer, chacun aura droit à peu près à 5 minutes pour présenter son point de vue, peut-être sur ce qui a été présenté auparavant ou sur sa vision des marchés des capitaux actuels et à venir. Et ensuite, on entrera dans la table ronde. Peut-être qu'il y aura des réactions spontanées de la part des panélistes ou sinon, on a des questions. Et on aura évidemment une période de questions-réponses avec l'auditoire. Donc, peut-être je demanderai à M. Blésing de commencer à ce moment-ci.
Mais vous allez
oui, je peux vous donner le.
Je peux me déplacer. Oui. Merci, bonjour à tous. J'ai pensé utile je pense que la plupart des gens au Québec connaissent bien le modèle, mais je pensais que c'était utile de représenter le modèle peut-être plus pour nos invités qui viennent du reste du Canada. Puis, vu la présentation de M. Cumming, vous comprendrez que je vais avoir quelques réactions à ce que M. Cumming a dit. Par ailleurs, je vais faire ma présentation en français. Je m'en excuse pour nos anglophones, mais je suis plus à l'aise en français que en anglais. Rapidement, le modèle, vous le voyez là, c'est une image, mais je pense que ça résume bien ce qu'on fait. On canalise de l'épargne des épargnants québécois vers des entreprises de deux manières, en direct. On a l'investissement direct, évidemment, en fonds de solidarité et à travers des fonds privés. Puis je viendrai là-dessus un peu plus longtemps tout à l'heure, en réaction un peu à ce que M. Cumming dit. Quelques chiffres pour vous positionner un tout petit peu le modèle. Le fonds de solidarité, c'est un actif de presque 12 milliards de dollars. On a des frais de gestion de 1,36, assez loin des 5% énoncés tout à l'heure par M. Cumming. Et c'est régulier ça depuis à peu près une dizaine d'années maintenant. On tourne autour de 1,4, 1,5, 1,36 depuis cette année. On a 620 000 actionnaires au Québec. Des rendements de 4,4 sur un an, de 6% sur 5 ans et de 7,5 sur 3 ans. Là, encore une fois, assez loin de ce que venait de dire M. Cummings. Nos entrées de fonds, on parle de 774 millions l'année passée. On tourne aux alentours de 750-800 millions d'entrées. Et on investit, bon an, mal an, entre 650 à 700 millions au Québec, puisque la loi du fonds veut qu'on investisse essentiellement au Québec. On a un portefeuille de 6,5 milliards en investissement privé et on a à peu près 2600 entreprises en portefeuille. Ce qu'on cherche à faire au Fonds de solidarité, et je pense que c'est vrai de d'autres grandes institutions au Québec, c'est de combler les carences de marché dans la chaîne de financement. La chaîne de financement, vous la connaissez tous, on parle de l'amorçage, le démarrage, la croissance, puis ultimement l'introduction en bourse. Évidemment, au Québec, on a un écosystème assez complet, mais il reste des trous dans cette chaîne. Il y a des endroits où les joueurs sont moins présents, il y a des endroits où ils sont plus présents, et il y a des endroits où les besoins des entreprises sont plus difficiles à combler. Essentiellement, ce que le fonds a fait, parce qu'on est conscient qu'on n'est pas capable forcément d'être expert en tout, c'est qu'on s'est appuyé sur des fonds spécialisés. On a investi dans des fonds spécialisés, on a joué un rôle de fonds de fonds. Particulièrement dans l'amorçage, on voit qu'on est dans un certain nombre de fonds spécialisés dans l'amorçage, quelque chose pour lequel le Québec, et je pense que les autres provinces ont un grand besoin. Fuel, Real Venture, Amorchem, C3E, donc vraiment des fonds spécialisés là-dedans, et on parle de plusieurs millions de dollars que le fonds a investi dans ces fonds. L'autre partie importante, c'est toute la partie du démarrage. Et là, on intervient en direct, mais aussi à travers des fonds. Ce que vous voyez en haut est tout petit, mais c'est notre constellation de fonds privés. En fait, on a une cinquantaine de fonds privés dans lesquels on a investi 750 millions de dollars et Terralis Capital dans lequel on a investi 250 millions de dollars. Au total, c'est 1 milliard qu'on a investi dans des fonds privés au Québec, plus le support à Ange Québec, qui est une partie importante aussi de cette chaîne de financement. Et quand on avance dans la chaîne, ben là, on commence à agir plus en direct. Déjà, en démarrage, on est présent. Et je vous dirais que c'est à peu près 50% en direct, 50% indirect via des fonds spécialisés. Et quand on rentre plus loin dans la chaîne, là, on est en général directement investisseur. Ce qu'il faut comprendre aussi, c'est que dans l'ensemble de cette chaîne, je vous dirais, dépendamment des secteurs d'activité, à 80%, nous sommes co-investisseurs avec d'autres investisseurs. Et puis, on est présent aussi pour ce qui est introduction en bourse. Lemon Paul, c'est ici. Stingray, une autre introduction, je pense, en 2013. Donc, on est vraiment à tous les échelons de la chaîne et on s'évertue à essayer de combler les carences qui peuvent exister dans cette chaîne. Quand on parle de carences, ce qu'il faut voir, c'est qu'on parle des carences liées aux phases, mais évidemment, il y a des carences d'autres types. On parle par exemple de carences en région. Il faut comprendre que la plupart des investisseurs sont à Montréal, mais des entreprises, il y en a aussi en région et elles ont aussi besoin de capitaux. Les réseaux qui desservent ces entreprises-là sont peu présents en région, voire pas du tout. Le Fonds de solidarité et les autres fonds fiscalisés et d'autres institutions québécoises sont présents et soutiennent les entreprises en région. Certains secteurs, évidemment, sont largement délaissés par le capital de risque ou le private equity. Et je pense qu'on a au Québec des entreprises qui en ont besoin, y compris dans le secteur manufacturier. Le Fonds de solidarité est présent. Enfin, la question de la taille des deals. En général, les entreprises de capital de risque investissent des montants relativement importants, mais là encore, les besoins des entrepreneurs ne sont pas toujours de 1 million et plus jusqu'à 50 millions. Les petits deals, entre 0 et 1 million, sont difficiles à financer, peu de financement dans ces types de deals-là. Et le fonds, grâce à son réseau, est capable de répondre à ces besoins-là. Autre élément, la question du cycle. C'est un défaut, mais c'est un avantage du fonds. On doit investir bon an, mal an, parce que la règle de fonctionnement du fonds nous oblige à investir. Mais ça veut dire aussi que quand il y a une crise économique, et qu'en général, les autres investisseurs disparaissent du marché, ben, le fonds reste présent et est capable d'assurer le maintien d'un deal flow important dans le marché. Je vous parlais de notre réseau, de ce qu'on est capable de faire. Vous voyez qu'il y a le grand fonds qui est en haut, 3 millions et plus, mais on a aussi une présence régionale à travers les fonds régionaux et à travers les fonds locaux. On parle de 75 fonds locaux et 17 bureaux régionaux qui investissent sur des petits montants, 0 à 100 000 pour les FLS et 100 000 à 3 millions pour les fonds régionaux. Je conclurai sur la question de la chaîne, puis je pense que la chaîne, c'est un équilibre à préserver. La chaîne de financement, ce n'est pas quelque chose qui est statique, hein. Ça bouge, ça change. Si on regarde plutôt un peu loin dans le passé, il y a 30 ans, du capital de risque, essentiellement, il n'y en avait pas au Québec. Aujourd'hui, il y en a peut-être beaucoup. Dans 10 ans, qu'est-ce qui va se passer? On a vu tout à l'heure, on a parlé de crowdfunding. Est-ce que le crowdfunding va prendre une place plus importante? Peut-être. Aujourd'hui, les marchés financiers ont lieu d'être moins à la mode. Est-ce que ça va revenir? C'est difficile à dire. La question, c'est qu'il faut s'assurer d'avoir une adéquation permanente entre l'offre et la demande de financement et garder l'écosystème en équilibre. C'est un écosystème, je pense que M. Magnan, dans son papier, a utilisé ce mot-là, c'est un mot important, mais un écosystème, le principe, c'est qu'il doit rester en équilibre. Si vous introduisez des chocs, il se déséquilibre et ça pose des problèmes à sa survie. Le dernier élément, c'est qu'une chaîne de financement, ça sert avant tout à répondre à des besoins, et les besoins des entrepreneurs, c'est ceux qu'il faut regarder, et c'est la base même de notre modèle, c'est de répondre à leurs besoins, et pas de s'en inventer comme financier, mais juste de répondre aux besoins de ces entrepreneurs en fonction de leur évolution, de leur goût et de ce qui se passe dans le temps. Ça conclut pour moi. Pour 5 minutes.
Merci beaucoup pour les passer. Merci. Je demanderai à M. Levy. Donc, vous pouvez parler à la table ou vous pouvez aller au micro debout.
Il y a un micro ici. Donc, en fait, c'est 5 minutes court dans le sens que Evan Mossel, c'est je ne sais pas si on devrait appeler ça un nano-cap ou un micro-cap. En fait, le market cap de l'entreprise est à peu près 10 millions de dollars. Donc, c'est vraiment une très petite entreprise sur TSX Venture. Donc, on vit à peu près tout ce que les petites entreprises vivent quand ils lancent l'entreprise de façon privée, mais en étant public. Et puis, on est rentré public, en fait, par suite à la présentation aujourd'hui, on est rentré public en 2012 avec un CPC. Donc, on a créé notre shell en 2010, ça a pris quand même un moment de temps. En 2012, on a fait le Qualifying Transaction, on est rentré public et on a connu les hauts et les bas d'être public dans le sens que le premier modèle d'affaires de l'entreprise n'a pas fonctionné. Donc, l'action a passé de 75 sous à, en fait, la moitié d'une scène. Donc, je crois que j'ai battu des records sur TSX Venture, c'est bien pour nous le dire, mais on avait un market cap à ce moment-là de près de 100 000 $. Et le défi de pouvoir refinancer cette entreprise-là. Malgré tout, je suis un fervent défenseur du TSX Venture après même ces histoires-là. Aujourd'hui, l'entreprise va beaucoup mieux, on a des ententes intéressantes, l'action s'est remise à vivre, on s'en est sorti. Je pourrais parler pendant une demi-heure de temps comment on a fait pour refinancer une entreprise à une scène, mais ça se fait, il faut juste être très créatif. Mais je suis convaincu, hors de tout doute, que si je n'avais pas été sur TSX Venture, l'entreprise n'existerait plus. Et ce serait, peut-être mon égo qui parle ici, mais ce serait une perte pour le Québec. Parce qu'aujourd'hui, ça va vraiment bien, on l'a annoncé, c'est public. On a signé une entente importante avec Centris, qui se trouve être, dans le fond, l'organisation qui chapeaute toute l'immobilier au Québec. C'est une entente provinciale, c'est une entente qui est très transformante. Hein. Les Anglais disent transformative, mais on peut le dire aussi en français. Et notre plateforme, maintenant, le rayonnement qu'on a ici au Québec avec cette entente-là nous fait faire énormément de présentations au Canada, aux États-Unis, avec des réponses qui sont très intéressantes. Donc, je crois que la raison qui fait que si on avait été privé, ça n'a pas fonctionné, c'est que quand on subit un échec aussi important qu'on a subi de refinancer une entreprise, ça avait été privé, je pense qu'il y a eu des fonds qui auraient voulu garder une valorisation supérieure à leur placement. Donc, tu sais, le minimum, donc, on a vu nous autres près de 15 millions sur les 10 dernières années. Donc, j'imagine qu'il aurait fallu garder une valorisation de 15 millions, mais avec un échec, ton entreprise vaut 100 000 $ sur le public, bâtir une valorisation d'entreprise avec une convention d'actionnaire universel comme on a sur TSX Venture, bien, ça fait toute une différence. Donc, grosso modo, si je pourrais finir une parenthèse, je crois qu'il y a un gros manque d'éducation de qu'est-ce que c'est être sur le TSX Venture pour une petite entreprise. La plupart des fonds, la plupart des gens que je rencontre vont dire que ça coûte énormément cher. Peut-être que ça coûte cher sur le TSX. Sur le TSX Venture, j'ai écrit un article sur mon blog là-dessus. J'ai vraiment comparé mon entreprise au moment que mon action valait 3 cents avec une entreprise privée qui avait levé sensiblement les mêmes fonds que j'ai levés. L'énergie que ça me demandait d'être public, faire les trimestres, je n'avais pas besoin de faire ça de façon mensuelle. On a parlé de Stingray tantôt, mais j'ai bien aimé l'article d'Éric Stoico qui disait dans le Journal des Affaires que quand il était privé, il devait se rapporter à tous les mois. Aujourd'hui, il respire, il le fait seulement tous les trimestres. Je pense qu'il y a un gros manque d'éducation parce que tout compte fait d'être sur TSX Venture, c'est pas pire que d'être une entreprise privée qui lève de l'argent. Parce que dès qu'on lève de l'argent, on a des comptes à rendre. Ceci dit, il y a un manque d'éducation aussi auprès des dirigeants des entreprises qui sont sur TSX Venture. J'ai récemment eu le privilège de rencontrer un CEO d'une entreprise publique de ma taille à Vancouver qui me disait « Je ne vous comprends pas, vous autres, les entreprises qui êtes sur TSX Venture et qui levez de l'argent de façon privée. C'est que vous faites des private placements. Vous êtes exactement dans le même créneau que les entreprises privées, pourtant vous êtes public. Pourquoi vous avez été public? Lever de l'argent avec des prospectus. J'ai commencé à mûrir l'idée, puis pendant que moi, je levais mon dernier financement, à peu près 1,5 million récemment, eux ont levé ils ont levé 8 millions en quelques semaines avec un short fund prospectus. Il y a de l'appétit, je l'ai testé dans ma dernière levée de fonds, j'en parlais tantôt avec Simon de Atmenco. Si j'avais fait mon dernier placement avec un short fund prospectus, qui ne coûte pas vraiment très cher, c'est un peu comme du crowdfunding, c'est que tu vas voir des courtiers en valeur mobilière qui ont des clients qui ne sont pas nécessairement des clients accrédités, mais qui cherchent dans leur portefeuille des petites entreprises pour avoir du grand rendement. Aujourd'hui, hors de tout doute, je suis convaincu que si on éduquait mieux les dirigeants d'entreprises sur TSX Venture, probablement qu'ils utiliseraient les leviers financiers qu'offre la vie publique, dans le fond, d'être une entreprise avec une convention d'actionnaire universelle, avec quand même un TSX Venture qui est quand même assez dynamique, je vous dirais, bien que c'est une entreprise technologique. Aujourd'hui, on a du volume, en fait, suffisamment sur notre stock. Je pense qu'on réussirait mieux. Le problème, c'est que la plupart des entreprises, peut-être parce que c'est dans le passé, c'était facile de lever de l'argent avec des placements privés, avec des investisseurs accrédités, mais aujourd'hui, c'est différent. Puis il y a de l'appétit auprès du marché pour les investisseurs qui ne sont pas accrédités. Donc, je pense que c'est des deux côtés qu'il faut qu'il y ait un travail. Le côté des entreprises qui veulent faire le sud d'aide publique, bien comprendre le levier financier que ça donne d'aide publique et de ne pas être une entreprise publique, mais agir comme une entreprise publique. Je ne sais pas si vous me suivez, parce que je ne suis pas sûr même si c'est clair dans ma tête quand je vous le dis comme ça, là, mais ça résonne de même. Finir un dernier point, si je peux me permettre, M. Magnan. Nous, on est rentré public en 2012 avec l'aide de fonds REA qui ont disparu depuis un an. Je pense qu'ils n'ont pas été renouvelés. Les fonds REA facilitaient grandement la levée de fonds des petites entreprises qui faisaient le saut public. On sait que, bon, on est un pays de ressources. Les mines ont beaucoup de succès à lever de l'argent à cause des actions accréditives. Moi, je pense que c'est important, puis j'espère que le ministère des Finances écoute encore, je pense que c'est important qu'on remette les REA, parce que si on veut propulser des entreprises à d'autres niveaux, il faut faciliter le financement. Puis les REA le facilitaient, c'était un retour d'impôt pour les fonds qui mettaient leurs clients là-dedans. Là, c'est ma parenthèse. Moi, je suis... puis, bon, en la fermant, ça fait pas mal de parenthèses que j'ouvre, là, je la ferme. Mais c'est d'ailleurs pour ça que je me suis engagé à participer à Québec Bourse sur le conseil d'administration, parce que Québec Bourse, c'est tout donner ces mandats-là. C'est donner les mandats d'éduquer les fonds institutionnels, d'éduquer les courtiers en valeur mobilière et d'éduquer aussi les CEO d'entreprises publiques qui agissent comme des entreprises privées. Je pense que ça fait mon 5 minutes, ça.
Oui, OK, c'est bon. Merci beaucoup. Merci. Harry?
So you want me to talk about the...
Do you have anything to add, maybe in light of the other presentations or in light of your presentation?
Well, I sort of got snippets of what you were saying. I heard qualifying transaction, and I heard... so you said you had a capital...
Exactly. Well, we went public in 2012. We did the CPC, the reverse takeover, and from 2012 to today, we're still running publicly.
Yeah, so I mean, I would just add that I am a big proponent of the venture I am a big proponent of the venture exchange for a couple of reasons. I mean, there's a lot of talk about equity crowdfunding and the private marketplace and all that. And that's fine, but I guess one of the big issues there is liquidity and adverse selection issues. So I feel like an alternative is, a regulated public market like the venture exchange where, when you're investing in riskier ventures, early stage companies, then the venture exchange offers you some liquidity. Whereas if you're an average investor and you're investing through crowdfunding or in the private marketplace, you don't have the same liquidity that you otherwise would on an organized public exchange. So I worry about sort of allowing too far regular investors in the private marketplace, whereby you can expose them to significant risks as well as liquidity issues. So I would just sort of add that to what you just spoke about.
OK. Yeah. Merci. Thanks. Nicolas? Oui.
D'abord, merci Michel de l'invitation. Ça fait presque 20 ans que j'investis dans des petites capitalisations, donc le sujet pour moi est très important, d'autant plus que, comme a été déjà mentionné, l'univers de titres dans lequel on peut investir n'est pas en croissance, ça nous préoccupe beaucoup. Donc, je travaille avec Pembroke Management. Pembroke est une société établie à Montréal qui gère 3 milliards d'actifs sous gestion, la moitié investie au Canada, la moitié aux États-Unis, mais uniquement en petite capitalisation. I had the pleasure of having Jay Ritter as a professor several years ago.
Okay.
When he was still at the University of Illinois before he moved to Florida. And one of the things he's told me is never invest in an IPO. Alors, j'ai suivi ses conseils et malheureusement pour François-Xavier, quand il est allé public, je n'ai pas investi dans l'IPO, mais je suis devenu actionnaire par la suite.
Ah, OK.
Funny, he says, I know you invested in the Facebook IPO, so it's funny you didn't follow his own advice.
Yeah, that's right. Donc, je vais essayer de commenter un petit peu sur ce qui a été discuté aujourd'hui, puis essayer de mettre un peu en relief ce que j'ai vu évoluer un petit peu dans l'industrie au cours des dernières années, qui pourrait un petit peu expliquer pourquoi il y a eu une ressurgence des fonds de private equity puis au détriment des émissions publiques. Une des choses que je remarque de la part de nos clients, c'est qu'ils ont tous passé d'une stratégie traditionnelle d'avoir à peu près 60% en actions, 40% en obligations. Puis quand je parle de clients, c'est des caisses de retraite, c'est des family offices, c'est des endowment funds. Je pense qu'ils ont tous suivi un petit peu ou essayé de mimiquer le succès qu'a eu le nommé Michael Svensson, qui était en charge de l'endowment fund ou Chief Investment Officer de l'Université Yale. C'est un type qui a eu d'énormes succès. Les gens ont essayé de décortiquer pourquoi il y avait autant de succès. Puis je pense qu'une des grosses conclusions, c'est qu'il y avait une grosse exposition dans son portefeuille à des stratégies alternatives, notamment des fonds de private equity. Et je siège aussi sur des fondations, puis ça a été un mouvement au cours des dernières années de prendre une partie de l'équité, d'ajuster à des gestionnaires private equity. Ça a mené à des firmes énormes, on a parlé de Blackstone, KKR, j'ai vu la semaine dernière Carlyle élever comme ça 3,5 milliards d'actifs sous gestion pour un de leurs fonds private equity. Il y a énormément d'argent qui s'en va vers ce milieu-là. Ce que ça fait en sorte, c'est que il paye un petit peu plus cher pour les investissements. Donc, l'alternative pour un émetteur qui considère un autre fonds de private equity d'aller public, c'est peut-être plus attrayant que ça l'était pour faire une ronde de private equity. Donc, ça, c'est un des phénomènes. L'autre phénomène qui est relié un petit peu à ça, c'est que l'accès au crédit pas cher, en ce moment, est extraordinaire. Alors, on sait comment fonctionne la plupart de ces fonds de private equity-là. Ils utilisent beaucoup de leviers, un peu moins d'équité, mais beaucoup de leviers, beaucoup de dettes. Et puis, en ce moment, avec les taux d'intérêt actuels, c'est beaucoup plus facile pour ces entreprises-là encore d'amener plus de capital pour investir dans les entreprises. Donc, ça, c'est point numéro 1. Point numéro 2, qui est un petit peu connexe à ça, c'est qu'il y a eu beaucoup d'innovation dans les stratégies de placement. Puis quand je parle d'innovation, c'est beaucoup d'approches différentes. Il y a plusieurs années, un temps où est-ce que la plupart des gestionnaires plus traditionnalistes, buy and hold, une approche à long terme. Là, il y a toutes sortes de stratégies qui short des stocks, qui tournent les portefeuilles très rapidement. Ça, je ne pense pas que ça a été sain dans la relation de mon industrie comme investisseur avec les émetteurs, parce que ça met beaucoup de pression sur les émetteurs pour performer à court terme. Puis je le vois quand je vais à des conférences, puis j'ai des rencontres avec d'autres investisseurs, le genre de questions qui se posent aux dirigeants d'entreprise, c'est souvent sous différentes formes. Quelles vont être tes ventes au prochain trimestre? Quelles vont être tes marges au prochain trimestre? Puis, plutôt que de dire c'est quoi ton plan stratégique sur 3 à 5 ans, puis essayer de comprendre c'est quoi les facteurs qui vont influencer sur ce plan-là. Il y a des approches très, très court terme. Puis je pense que je vois une statistique, le taux de détention moyen d'un stock aux États-Unis sur S&P 500, maintenant, c'est 6 mois. Donc, c'est pas des gens qui investissent, c'est des gens qui louent des stocks. Donc, ça a une influence un peu sur la relation, puis les questions qu'ils posent aux dirigeants d'entreprise, puis ça amène un petit peu les dirigeants d'entreprise à avoir un certain pushback sur notre industrie. Je ne pense pas que c'est sain comme relation, puis je suis convaincu qu'il y en a plusieurs qui pensent 2 fois avant d'aller public. Peut-être le dernier point, c'est plus par rapport aux entreprises présentement qui sont dans la nouvelle économie, qu'on passe à des Facebook ou des Uber ou d'autres modèles. C'est des modèles financiers qui ont énormément de leviers opérationnels. Les entreprises peuvent devenir des multinationales du jour au lendemain. On pense à Uber qui, en l'espace de quelques années, est devenue une entreprise multinationale, Facebook, etc. Donc, avec l'avènement d'Internet, les entreprises peuvent exploser. Je pense que ça amène au phénomène que les entreprises peuvent aller public à des capitalisations beaucoup plus élevées. On l'a vu dans vos statistiques. Il y a beaucoup moins d'IPO, de petites capitalisations, puis le nombre de grandes capitalisations qui vont public, je pense qu'il est plus élevé. Donc, il y a un petit peu le tissu économique, structurel des entreprises change un petit peu. Je pense que ces entreprises qui ont plus de leviers, qui peuvent avoir des capitalisations plus grandes, qui n'ont pas besoin de beaucoup de dépenses, qui n'ont pas beaucoup de dépenses en capital, donc n'ont pas nécessairement besoin de l'accès au capital autant. Donc, ça résume un peu mes propos.
Okay. Merci beaucoup, M. Soult.
Alors, je vais très rapidement vous donner un petit background. Ça fait 25 ans que je suis dans la même industrie, donc toujours dans l'industrie de l'éclairage. J'ai vu cette industrie-là avoir 3 transformations technologiques. La dernière, qui est la transformation vers la technologie des diodes, est sans précédent. Est en train vraiment de changer complètement la nature de notre industrie et pas juste de changer l'opportunité d'affaires qu'on fait face tous les jours, mais c'est changer la façon qu'on gère une entreprise dans notre secteur d'activité. Antérieurement, on avait une industrie qui était plus analogue, où est-ce qu'on était plus des designers mécaniques, si on veut. Aujourd'hui, on demande à une entreprise de notre secteur d'être une compagnie technologique, d'innover au niveau firmware, au niveau software, d'avoir de l'ingénierie optique intégrée dans les processus de développement de produits. Donc, une industrie beaucoup plus complexe qui a demandé une transformation. Moi, j'ai vu venir cette opportunité-là comme étant, j'ai vu venir ce chaos-là dans notre industrie comme une opportunité. Et en 2006, j'ai fondé Lumenpass. C'est ma 3e entreprise dans le secteur de l'éclairage. Donc, on a fondé Lumenpass avec une vision claire de vouloir partir d'une feuille blanche, d'intégrer toute cette expertise-là sous un même toit afin d'avoir un cycle de développement de produits ultra rapide pour capter vraiment les opportunités de marché qu'on voyait dans notre marché. Notre industrie, c'est une industrie d'environ 100 milliards qui se convertit très, très, très rapidement vers le LED, ce qui donne des belles perspectives de croissance. Donc, on a lancé l'aventure en 2006 de façon privée. J'avais la chance d'avoir une autre business qui était rentable, donc je n'ai pas eu besoin de VC ou de private equity pour la démarrer et je n'en ai pas eu besoin non plus pour vraiment l'amener plus loin. En 2008, j'ai amené un de mes amis d'enfance comme investisseur avec moi, avec lequel je faisais de l'investissement personnel aussi. Et on a fondé ensemble jusqu'en 2011. Et c'est en 2011 qu'on est allé chercher de l'investissement privé. On avait regardé dans les private equity un peu, mais on trouvait le processus un petit peu trop laborieux et long. Puis en fait, on avait accès aux capitaux nous-mêmes. On s'est dit, pourquoi se donner ces mots de tête-là? On va le faire. Alors, on a fait appel à ce qu'on appellerait les Friends and Family. Donc, on a fait une ronde en 2011 très, très, très rapidement de 10 millions de dollars. Ça a pris 3 semaines, on avait levé l'argent. En 5 semaines, c'était déboursé. ça a été une belle expérience. Et on a scalé la business. Et quand on est arrivé en février 2012, on a eu une offre extrêmement importante d'un très gros joueur américain pour acheter Lumenpass. Et c'est à ce moment-là que ça a été vraiment une décision stratégique de dire OK, est-ce qu'on la laisse aller et on passe à autre chose parce que ça peut être très, très bon pour la succession familiale et tout l'avenir. Mais on voyait qu'on était sur quelque chose d'unique. On était dans une industrie de 100 milliards qui allait se convertir, qui créait un chaos dans notre marché. Puis on sentait qu'on avait la recette du colonel Sanders. Là, puis on voulait être capable de faire notre crispy chicken. Alors, on a conservé la business. Et avec une vision stratégique de se dire, pourquoi être le consolidé? On pourrait être le consolidateur. On n'est pas obligé d'être le consolidé. Alors, on a décidé de vraiment accélérer le déploiement. On avait un bon feedback du marché avec les produits qu'on avait introduits. On a investi davantage. Septembre 2012, on fait une 2e ronde privée. Avec la même gang qui investit, puis on amène un petit peu plus le cercle de Friends and Family un petit peu plus élargi. Cette fois-ci, on avait levé 15 millions. Et avec une vision claire de ne pas vouloir aller chercher un private equity, puis de vouloir aller public. Pourquoi on voulait aller public? C'est qu'on a vu que notre secteur allait vraiment se convertir vers le LED, puis on a fait un SWOT. Je vais continuer en anglais, comme ça mes collègues vont faire. We did a SWOT before going public and before having a strategy to scale the business. And the SWOT we did, which is strength, weaknesses, opportunities, and threat, we realized where we were strong, where we were weaker. We drafted a product portfolio strategy to see what do we want to accomplish. And then we look at ourselves in the mirror and we said that we cannot win in this category because we don't have the expertise, but we're very good in that category. And then we narrowed down our strategy to really scale the business. And then once you have your product roadmap in front of you for the next 10 years, then it becomes a make or buy analysis, right? Do you buy or you make? And in a very, very well analyzed, very disciplined, if you will, analysis. So we decided to go public in September 2013, and we regrouped a team of experts around the table that were able to assist us. At that time, we were thinking of going on the NASDAQ, and we had a US CFO. We had all of the ingredients to be successful on the NASDAQ, but we were small compared to most typical NASDAQ IPO. We were doing approximately $40 million in sales. So because of the window at that time on the TSX that was opening for IPOs, we started to listen a little bit more to Canadian bankers. At the beginning, we said they're Canadian bankers. They'll tell us that we need to go on the TSX. That's what they're going to tell us. But listening to what they had to say was quite interesting, because we realized that the review period was much quicker than filing on the US side. Because when you're filing a prospectus on the TSX, you're guaranteed a review within 2 to 3 weeks. When you're filing a prospectus on the US, it's going to take 5 months. That's why we're seeing a lot on the US stock exchange what they call a dual track strategy. The dual track means that you either go public or you sell your business, because you have time to do this, because your prospectus is filed, everybody sees who you are, they know your numbers, they know where you're going. So it's also a flirting period with potential acquisition target, or the other way around, companies to acquire you. So once you press the button on the TSX, there's no way back. You have to go, and it's full speed ahead. So that's what we did. It took 4 months to prepare ourselves for an IPO. So there's no other, like when you're building a business, what you do is you have to get the best people in every position to be successful. You cannot be good at everything, so you need the best people. So what we did is we brought the best people to help us to be prepared for an IPO. So we had an experienced CFO who did it before. We had an experienced chief legal officer who did prospectus before. We had advisors. We built a board with public company experience, with solid company experience, not only good stories, bad stories too, so that we can prepare ourselves. And then, it took about 4.5 months to file. We filed, and then we went on the road to meet with potential investors. And we were looking to raise $75 million at that time. And obviously, when you file for an IPO, you always have what you call an over allotment option, which you can increase the size of your IPO by about 15%. But we were saying that we could potentially size up the deal up to 100 million if the demand is there. So our decision at that time to go on the TSX was the best. We did a 2.5-week roadshow, and we had commitments for $1.4 billion. We were 17 times oversubscribed. It was amazing. What a hype. But when you wake up in the morning and you realize that now you need to deliver, it's a different story. However, we had a plan, and I believe we went public for the right reasons. We went public not for liquidity. We didn't, for shareholders, for previous shareholders in the private equity. We went public because we had a strategic plan to develop, and we were able to execute that plan. Post-IPO, we went public, we were doing 46 million. This year, we should be doing around 230. And we did 5 acquisitions. Today, we are in very good shape. Company's profitable. We have no debts, and we generate cash every quarter. We could have never done this without going public.
Okay, so were you paid by the TMX, for your statement?
No, it's when I heard about the private equity investors and no return and the issue that there's a lot of cash KKR and all of those companies, I like I like everybody's presentation, but the last one is the one I remember the most. it's hard to find. I am a private equity investor. I own 3 funds with my partner. We are investing in Quebec companies, and we've invested in 15 different companies. And we have done some co-investment with Fonds de Solidarité. So you're right, you're a great partner. We supported a lot of businesses. However, it's hard to find deals. It's hard to find good companies. It's much harder than what people think, even for small funds. So imagine when you're a KKR, and you need to find big companies. So that's why now what you're seeing and what we're seeing, and I've seen it with exits that we had with certain of our investments in the private equity world, I'm seeing private equity funds bidding as high as a certain strategic right now, which I've never seen before. They were always discounting the strategic, and now they want the company because they have no companies, and they're willing to take a big stake at much bigger companies. So that I have seen it as an investor personally, and it's really changing. And when we're saying that there's no cash, there's a ton of cash available. I think that there's a lot of money available for investment. What's missing here is the willingness to take the risk earlier in the equation. There's very few companies that are getting the equivalent support as a US company, as an example. You will see here a lot of funds willing to go the extra mile when the company has close to no more risk. It's when there are in growth phases, growth stages, and it's no longer the VC stage, it's growth stage, and now there's a ton of money available here. But backing a company and create the next Facebook, it's hard. What is happening? You have SL Partners who invested in Lightspeed. They were the one who dictated the round, and everybody followed here in Quebec. Why can't we dictate the round? Why can't we in Quebec take the lead for those rounds? This is not what we're doing. We're waiting for someone to lead, and then we'll follow. That's what everybody says. As soon as there's lead investors, we'll go. I think we should look at ourselves in the mirror, and we have to be willing to take those risks if we want to build companies like that.
Okay, merci.
Yeah.
Merci. And you have the last word.
Well, okay. So this is, as I said earlier, this is a tough audience to talk about labor funds in Quebec, and it's a coincidence that we're on opposite sides of the table. And I didn't understand everything that was said in the first presentation for the panel, but I heard my name mentioned a few times, so I thought, okay, I guess I can say a few things. First, maybe a bit of a preface comment is that, with an organization like such as the Solidarity Fund, it's definitely going to attract the best people because they have the huge amount of money. So I don't think the issue that's going on is along those dimensions. Is perhaps more of an organizational design issue, and that organizational design issue in part has what we often refer to as regulatory capture. Has a lot of mechanisms built in that also wants to protect itself. And so I could just give you 2 anecdotes to sort of chew on to think about this a bit further, which is, first of all, I remember back in 2007, I mentioned the C.D. Howe Institute earlier, which I don't think I'll do anything with those folks again in the future, in light of what happened earlier this year. But back in 2007, I did a project for them talking about public policy towards venture capital in Canada. And somehow in the review process, where they, in some ways, ran this by the Solidarity Fund, they told me as a condition of putting the paper up on their webpage and distributing it, that I had to include a statement that said, despite all the negative things that I had to say about the Labor Fund program, they had me include a statement that said, but Quebec's different. And so I had no way of supporting this from any data or anything, and I was sort of, okay, but how, but certainly that was a condition of distributing the paper. So I had this very weird thing that I remember even dating back about a decade ago, where the first time ever I was obligated to put something in a paper that I didn't necessarily agree with. But I, being like a regular person, hoping to get ahead in life, included the statement because I put the effort into the paper and wanted it distributed. So fast forward ahead about 5 years, I'll pass along a story that actually might get me into trouble for passing along because I was told never to pass along this story, which involves some folks at Laval University. Maybe I shouldn't say their names, but they did a study of the Solidarity Fund where they benchmarked the investments made by Solidarity against other comparable investments for which they could find returns, and the news wasn't good for Solidarity. And so they distributed this paper, but apparently they said they got into a lot of trouble for doing so. Their university told them their research funding would be threatened, and they decided they're no longer allowed to work on this topic. And they're very upset about this and felt like they were living in a banana republic. So I sort of throw that out there as no way of backing that up. I'm just telling you what someone else told me. But I think that there's scope for more transparency and understanding public policy towards venture capital in Canada. One thing that comes out certainly, and this is a more general thing about what happened with the allocation of the $500 million that the federal government put out earlier, dating back to a couple of years ago, was there's an issue with reporting returns in venture capital and private equity, which has to do with the fact that private equity and venture capital returns take a long time to get realized. So they make their money not by getting dividends on equity or interest on debt, but instead they get their money by selling companies in acquisitions and taking them public as IPOs, or possibly one of the other less attractive exit outcomes. And that process takes a long time. It can take anywhere from, if it's fast, maybe 18 months, but say if it's an early stage biotech investment, it could take 7 or 8 years before you have a sale. And in that interim period, there's a huge amount of scope for reporting valuations on companies that are private and not yet sold. And so those valuations can be done in a way to smooth returns, to say that you get, say, a 4 or 6% investment return every year, for example, or sometimes they might be inflated. And one time where we apparently have seen some evidence of inflated valuations came from funds that were trying to get access to the $500 million that the federal government was allocating over the last, over a couple of years ago. And as one example of arguably less transparency in the business that we should see. And that comes partly in the allocation of government funds, but also even in private fundraising as well. So there's issues I think that could be dealt with. But I probably said too much, so I'll stop talking and leave it to the panel for further discussion.
OK, merci. Donc, c'est ça, il y a quelques questions. Je ne sais pas s'il y a des réactions. Oui.
Qu'est-ce que vous pensez? Je pense que M. Cummings fait des affirmations assez graves quand même derrière ça. En toute honnêteté, je pense que s'il y a bien une institution au Canada avec laquelle on n'a certainement pas beaucoup d'amitié, c'est le CEO Institute. Donc je vois mal comment nous aurions pu convaincre le CEO Institute de faire quoi que ce soit en faveur des fonds de travailleurs au Québec ou au Canada. Ça, c'est le premier point. Le deuxième point, je pense qu'on peut citer en l'occurrence les chercheurs auxquels M. Cummings fait référence, puis je pense que c'est M. Suret de l'Université Laval, je pense que c'est un fellow de Cyrano. Ces articles ont été publiés, ils sont disponibles sur votre site, ils sont disponibles sur tout un tas de sites publics. Donc je pense qu'il n'y a jamais eu aucun empêchement à ce que des études sortent sur le Fonds de solidarité. Au contraire, ce qu'on cherche, nous,
c'est à trouver des gens qui seront capables de venir contredire les travaux de M. Cummings, qui par ailleurs, on ne va pas faire un débat uniquement entre M. Cummings et moi, mais je vais quand même juste conclure sur ce point-là. Je pense qu'il y a eu pas mal d'études qui ont démontré, puis vous-même, il y a eu des études qui ont démontré que les travaux de M. Cummings étaient, on va dire, moyennement solides sur le plan méthodologique. Je pense qu'il y a du dogmatisme derrière ses choix et derrière sa ligne éditorialiste. Alors, je pense qu'on va arrêter pour ça. Le point est que les travaux en question dont il a parlé sont publics, sont disponibles. Et encore une fois, s'il y a des chercheurs qui s'intéressent au Fonds de solidarité, ça nous fera un plaisir fou de les rencontrer et de leur partager des données. On cherche à démontrer, et si on vient parler aujourd'hui, c'est qu'on cherche à démontrer que le modèle a de l'intérêt et qu'il sert l'écosystème québécois, et on en est convaincu. On ne cherche pas à cacher quoi que ce soit. D'ailleurs, toutes nos données sont publiques, on a un rapport annuel, on n'est pas un fonds privé obscur qui cache ces données, on a un rapport annuel qui donne toutes les données sur le Fonds de solidarité, toutes nos données sont publiques. Donc, si vous cherchez de la donnée sur le fonds, si vous ne la trouvez pas parce qu'elle est publique, déjà c'est difficile, mais on va se faire un plaisir de la donner à n'importe qui cherche à travailler sur le Fonds de solidarité.
OK, merci. Just for the benefit of Douglas, yes, there was a statement saying that you're open to share data, to share data in terms of the performance, but more seriously, I think
je vais même le faire publiquement, je vais donner mon rapport annuel en anglais. Okay.
Comme un débat présidentiel.
Oh, oui, c'est ça.
On va arrêter, on va revenir au sujet de la conversation.
But no, the point, the thing, I'll just follow up briefly to what you mentioned earlier in terms of the positive return showed by the fund over the years and the management fees. And my understanding, though, and maybe if you could add, Douglas, on this, I think there was a legal difference in the way the labor funds were structured in the rest of Canada and the way they are structured in Quebec in terms of their governance and the way they were started. I think you had private promoters in the rest of Canada, from what I understand. So could that explain, I guess, the overall evidence you're providing, or?
Private venture capital funds that are raised as limited partnerships that get their money from institutional investors have an extremely different structure with a lot of negotiated covenants that, set up the structure of the fund in broad strokes. And the labor funds, with slight differences across provinces, have covenants not through limited partnership covenants, but instead the covenants are set out by statute. And the statutory covenants are completely unlike any of the privately negotiated covenants. And there's a lot of evidence, empirical evidence, that the structure and governance of limited partnerships is quite different than that as to what you see from the retail venture capital that has statutory covenants, and that arguably the statutory covenants are perhaps not designed as well as they could be relative to the limited partnership covenants, irregardless of the profits.
Yeah.
So one thing that I guess just curious about. So my understanding, and Doug, correct me, is the private equity market on average you should be actually expecting negative returns. I mean, the way the private equity market works, and correct me if I'm wrong, Doug, is you have a lot of failures and then you have this home run. So you're saying they are positive returns on average?
Yes.
Because usually you're looking for skew, I guess, and it strikes. I mean, I think even in the US, the private equity market has negative returns on average. So either you guys are really better than everyone else, or I guess, to Doug's point, there might be something else going on.
But are you referring to venture capital or private equity?
I think both. My understanding, correct me if I'm wrong, Doug. I mean,
yeah, they're
on average, I'm saying.
So the average fund doesn't do very well in venture capital or private equity. Private equity over the last 15 years has done, on average, better than venture capital. But certainly the big thing that you see, this is way more pronounced in the US, is that there's massive differences for top tier funds and bottom tier funds. So the top quartile funds have huge returns that are, well in excess of 20%. And the interesting thing about it is they have massive performance persistence. So I'm sure people ask you on a regular basis. For example, my family members often ask me this: Douglas, you're a finance professor. What mutual fund should I invest in? And you say, well, I have absolutely no idea because it's very hard to forecast future mutual fund performance. However, in the private equity and venture capital world, it's extremely easy to forecast who's going to be next year's stock fund because of the enormous performance persistence. So there's amongst the private funds that do very well year in on year out. So whereas the average fund doesn't do very well, the bottom tier funds do quite dismally. So that's a big difference in that marketplace.
But maybe moving the debate forward, I'm going back to Monsieur Souvé. Now that you're public, how do you find the experience? You said you liked it, but like facing the analysts, the portfolio managers, the regulators, IMF, is that what you expected? Were there any surprises? And would you wish to have considered alternatives? Or were there alternatives? And what's the plus side for public markets?
There's always alternatives. I mean, you can finance a business privately. You can finance it publicly. There's several alternatives. For us, like I said, it's like we have a very strong team internally, handling the reporting, handling the compliance, and so I don't have to worry too much about that. I'm involved in the process because I need to sign, for our disclosure. So obviously I need to be comfortable with what I'm signing, but I'm not involved on the build up of the day-to-day of that. Right? I have a team that is very structured. So for me, it's not too painful. Having to deal with analysts is, you're going public. When you do an IPO, and that's why he's not buying at the time of the IPO, there's two different things, right? When you're going public, it's one chance in the life of an entrepreneur. You want to raise as much capital as possible and dilute as less as possible. You want to do that once, you have one chance, right? And some people may say that, but it's unfair for the shareholders and all of that. I don't think it's unfair because it's having allocation for the shares. It's like you want shares, you believe in our 5-year plan. Maybe the first year or the first 18 months won't be as sexy as the following 24 to 36 months after. But overall, on your 5-year, we really believe we're going to deliver great return for our shareholders. And we gave shares allocation, if you will, at the time of the IPO. So for me, I would have never got the valuation I got with a private equity at the time of the IPO. And I wanted to execute a business plan, which was, expanding my product roadmap and penetrate the market faster. And the IPO was giving me the best tool to do it. On a private equity, I would have needed to negotiate, at one deal at the time, sit down, and it's not the same freedom of operation.
So in a sense, it created value.
It created value
for everyone.
For everyone, absolutely. I believe in it. But I mean, private equity is good too. It's good too, but it depends where you are in your business. And what the context of your industry also. If speed is important because there is a window in your space, you want to use the vehicle that will provide the quickest access to cash. Mm-hmm. To me, it's the way I see it. Every context is different, right? You have to analyze the context. For me, being public, you can do a bought deal in Canada and get money for a specific deal that you cannot really do in the US. Mm-hmm. So that's another benefit on the TSX. For the ones that are not familiar with bought deals, is essentially the bank buys your stock and put the stock in the hands of people like Nicolas, as an example, in a very fast pace, and they do that. So you have quick access to capital. When you want to raise money in the private equity world, if you're very good, you're going to close in 3 months. If you're very good.
I have to put a plug in. I have a paper on bought deals just in case anybody's curious. And it shows the success of the bought deal.
Some of the feedback I've gotten from other companies in which we invested, in addition to speed to market and cost of capital, which is lower if you go public. But for some companies, being public also helps them gain market share. But some of their customers, sometimes they're a bit more hesitant dealing with privately traded companies. If they look at a publicly traded company, they see the financials, they know they'll get paid. If they're a supplier, and if they're a customer, the company is much better known, it's in the press a bit more often. It allows them to be more successful in the marketplace.
So to create values with the other stakeholders, like the customers or even the suppliers.
Well, the suppliers, it gives them comfort because they have access to the financials and they know whether this company is in financial difficulty or not. If not, then it'll dictate some of the terms they're willing to give to their customers. And if that company is in good financial footing, then those terms probably are more relaxed than if you're selling to a publicly traded company whose finances are not great, then the terms will be a lot stricter.
Same thing.
Or to a private company.
Je vais ajouter là-dessus, pour l'avoir vécu, même dans une petite entreprise, quand les finances ne sont pas très bonnes, d'être public, moi, ça m'a aidé à signer mon plus gros deal à la vie avec Centris parce qu'ils ont regardé l'historique de notre capacité à lever de l'argent, ça les a rassurés. Mais c'était important pour eux autres qu'on ait nos finances auditées parce qu'ils participent au fait du sharing revenue. Fait qu'à quelque part, si j'avais été privé, ils m'auraient forcé à auditer mes chiffres de toute façon pour être sûr que la plateforme leur retourne leur dû pour les services qu'ils vont rendre à l'entreprise. Donc, j'ai toujours dit, à quelque part, on s'est toujours dit, si ça ne va pas bien et que tu es public, ça va aller encore plus mal avec tes fournisseurs parce que tes fournisseurs vont avoir peur de toi. Dans mon cas, ça m'a aidé. Carrément, ça a aidé à...
Ça a donné confiance.
Absolument. En fait, ça a donné immédiatement les outils que le partenaire avait besoin pour pouvoir suivre l'entreprise avec le deal qu'on avait signé. Donc, ça a été un plus. Définitivement.
Peut-être ça m'amène à parler au niveau du fonds de solidarité. Dans quelle mesure l'exit par un IPO ou un PAPE est une option parce que vous avez surtout vous avez un portefeuille d'actions publiques, mais vous avez un gros portefeuille de participation dans des compagnies privées. Vous avez mentionné Stingray et Lumenpulse que vous étiez actionnaire avant. Mais est-ce qu'il y en a d'autres? Est-ce que c'est une option? Est-ce que c'est sur la table quand, à un moment donné, vous voulez monétiser votre investissement?
Je crois que c'est évident qu'on a, comme tous les investisseurs en private equity, la volonté ultimement d'aller public. Maintenant, ça ne peut pas se faire sans la volonté de l'entrepreneur. Vous le disiez vous-même dans votre papier, c'est un triumvirat. Ça prend des investisseurs privés, ça prend des investisseurs publics et ça prend un entrepreneur qui a envie d'aller public. Donc, je pense qu'on a toujours cette volonté de faire des sorties quand elles sont bénéfiques aux entreprises dans lesquelles on a investi. Maintenant, les faits nous ont montré qu'il n'y avait pas tant d'entrepreneurs qui ont voulu aller public dans notre portefeuille. Encore une fois, on n'a pas les moyens, nous, de les empêcher d'aller public. On ne cherche pas à les empêcher d'aller public. S'ils veulent le faire, on va les supporter dans cette démarche. Maintenant, on en a deux qu'on a pu citer. Peut-être dans le passé d'autres, je ne connais plus assez notre portefeuille plus ancien. Je pense qu'on a cette volonté, comme tous les autres, d'aller monétiser une partie de nos deals. C'est certain que la forme des investissements qu'on fait, on se prétend être du capital patient. Donc, on n'a pas une pression sur les investisseurs, sur les entrepreneurs pour les pousser publics, mais on n'a jamais été à l'encontre de leur volonté d'aller.
Mais il y a une certaine frilosité.
Je ne sais pas si. De la part de qui? De la part des
entrepreneurs.
Je pense de la part des entrepreneurs, oui. Alors, je reprendrai les propos de M. Lemire. Je pense qu'il y a un problème d'information, il y a un problème d'éducation, il y a un problème de peur de cette lourdeur des marchés qui, malgré tout, en partie, peut s'avérer vrai. Je pense que M. Soulet disait que toutes les entreprises ne sont pas prêtes à aller public. Il y en a pour lesquelles le timing n'est pas bon et qui certainement auraient dû mériter d'attendre quand on voit les résultats de certains IPO. Je pense que c'est une fenêtre d'opportunité qui n'est pas grande. Qui demandent des conditions spécifiques pour qu'elles soient réussies. Et il y a des fois des entrepreneurs qui ont choisi le bon timing, et tant mieux pour l'économie, tant mieux pour la création de valeur au Québec et la création d'emplois. Malheureusement, il y en a aussi pas mal qui ont raté leur timing et qui se retrouvent avec des coquilles vides aujourd'hui en bourse, qui ne valent plus grand-chose et qui n'arrivent plus à financer leur volonté d'expansion.
Et vous aviez quelque chose à rajouter?
En fait, je comprends que l'exit, l'IPO peut être un exit pour un fonds institutionnel comme la FTQ. Est-ce qu'on pourrait envisager éventuellement que la FTQ, par exemple, participe beaucoup plus dans le venture public que vous faites actuellement? Je pense qu'actuellement, les investissements, tout ce que j'ai entendu dire, puis peut-être que j'ai tort, mais c'est que vous préfériez les investissements privés dans le small cap, là, 50 millions et moins, que le public ce qui nous pénalise, nous autres, les petits small caps en tant que tel, parce qu'on est pas capable de lever de l'argent auprès de la FTQ.
Nous, en fait, ce qu'on a mis en place, c'est qu'on a mis un fonds qui soutient les petites capitalisations. C'est qu'on a 500 millions aujourd'hui qui sont essentiellement gérés par des gestionnaires de fonds qui, au fond, investissent. Le mandat qu'ils ont, c'est de soutenir des faibles capitalisations. Aujourd'hui, c'est 500 millions. Est-ce assez? Je ne sais pas. Peut-être qu'il y aurait moyen d'augmenter, puis certainement qu'on regarde ça régulièrement. Mais c'est quand même 500 millions dont l'objectif est exactement de soutenir le flow sur des petits titres à faible capitalisation au Québec.
Boursière.
Boursière, oui, oui. C'est vraiment des titres. Le fond, je m'échappe. Je pense que c'est.
Vous avez la carte du gars?
Mais c'est un bon point parce qu'il y a plusieurs entreprises en dessus de 100 millions de dollars qui sont des orphelins dans l'industrie parce que les courtiers ne les couvreront pas. Pourquoi? Parce que les commissions ont baissé beaucoup dans les dernières années, donc les maisons de courtage ne veulent pas allouer des ressources de recherche à ces entreprises-là, c'est pas payant. Ça ne paye pas assez, puis comme ça, ça ne pas assez élevé. Donc, il y a vraiment un créneau d'entreprise.
Ça c'est le résultat du changement de la loi des banques des années 80. On a créé tellement de grosses firmes, des petites boutiques, on en parlait, ça existe encore, mais il y en a beaucoup moins.
Il y en a beaucoup moins qui sont sous pression et aussi.
Exactement. Donc, c'est le résultat de ce changement-là. Toutes les banques achètent les boutiques, les firmes, il n'y a plus d'analystes pour les petites entreprises. Mais reste qu'une petite entreprise du TSX Venture qui performe, on réussit à aller chercher de l'attention sans analyse. En fait, j'en suis la preuve, on a réussi à passer avec beaucoup de volume d'une demi-cent, je disais 0,05 cents, ça existe du TSX Venture, des demi-cents, il arrondissent pas 5 cents, jusqu'à, on montrait à peu près à 25 sous là, actuellement. Donc, ça existe d'aller tirer l'attention, mais ça, c'est un gros manque actuellement dans le monde financier. Là. Le vide que ça a créé, la loi des banques qui a été changée en 1980.
Il va y assez de moins en moins d'investisseurs au détail, je pense. La plupart des investisseurs, il y a leur courtier, je vais acheter des fonds.
C'est les ETF.
C'est les ETF.
Les
courtiers, quand ils achètent un titre en particulier, il faut que ça soit sur une liste qui est approuvée. Donc, avant qu'ils achètent des entreprises comme ça, c'est difficile.
Toute la logique du marché, finalement, au niveau des institutions financières a changé aussi. Puis c'est beaucoup maintenant de la gestion discrétionnaire, donc les courtiers gèrent des portefeuilles standardisés, à un certain point standardisés. Et il y aura moins de, je pense, d'ouverture à acheter des
il y en avait moins. Moi, je vois une différence. Ma dernière levée de fonds, je l'ai faite entièrement avec des courtiers. C'est la première fois que les courtiers ont participé dans un placement. C'est un petit placement de 1,5 million, mais qu'avec des courtiers. Des courtiers de banque, oui. Québécoises, on va les nommer, mais Desjardins a participé fort, mais également Canaccord, ça m'a beaucoup surpris. Ils ont de l'appétit, parce que les courtiers me disaient, moi, écoute, il faut que je batte l'index. Si je veux aller chercher des clients, il faut que je commence à battre l'index. Puis pour battre l'index, j'ai appris que c'est dans le TSX Venture qu'on parle du rendement. Je caricature ça, là, mais j'ai vu un élan, puis je pense même que je pourrais parler avec d'autres entreprises, dont même, puis on voit de l'intérêt de plus en plus de la part des courtiers. Ceux qui veulent sortir des sentiers battus n'ont pas le choix de chercher des façons d'avoir du rendement. Donc, analyse tout pas. Mais c'est très petit. Mais je veux dire, j'ai levé 1,5 million en 3 semaines versus une entreprise privée qui avait voulu avoir un placement privé de 1,5 million, ça avait pris 6 mois. C'est quand même plus avantageux d'être public pour ces fonds-là.
Parfait. Merci. Bien, je vais ouvrir la salle aux questions maintenant. On arrive, il nous reste encore quand même une vingtaine de minutes. S'il y a quelqu'un qui veut se lancer, question à nos panélistes. Oui, M. Campbell. Levez-vous.
Je dis les noms. Je travaille avec Michel et dans l'histoire de votre compagnie, c'était vraiment intéressant. Et j'aimerais avoir your family and friends à un moment donné. Mais à ce stade-là, si tu n'aviez pas aussi laissé avec des familles et des amis comme ça, what would you have done? C'est une question.
On aurait pris des fonds d'investissement plus traditionnels. Oui. On avait visité les fonds. Mais c'est toujours le chicken and egg. Tu veux aller chercher une certaine valorisation, puis certains fonds vont être prêts à te la donner, puis là, ils vont avoir des clauses avec des ratchets, ils vont avoir avec des double dips, ils vont avoir, je parle en termes de choses que beaucoup de monde connaissent, mais peut-être d'autres moins. Les structures d'investissement de capital n'étaient pas tout le temps intéressantes. Puis moi, je voulais faire rentrer les gens en privilégiés, avec un rendement minimum garanti, mais sans plus, pas de double dip, puis tout ça. Fait que c'est certain que j'ai regardé ça en premier. Mais il y avait des alternatives. On aurait pu prendre des alternatives. Puis si on n'avait pas été capable rapidement, ça a toujours été plus facile pour nous de lever du financement parce que moi puis mon partenaire, on en prenait toujours beaucoup de la ronde. Fait que quand tu supportes une ronde avec l'investissement, la personne se dit « Oh, he's got a skin in the game », puis c'est toujours un skin in the game à chaque fois. On était là. Fait que ça crée un engouement, ça crée un momentum. C'est plus facile à lever du financement dans ces conditions-là. Quand tu lèves un financement et que tu ne mets pas d'argent, puis toi, tu n'en as pas, puis c'est pas parce que tu veux mal faire, tu n'en as juste pas, c'est plus difficile. Parce que là, tu te dis, toi, qu'est-ce que tu fais? T'as-tu hypothéqué ta maison? Mais je pense que ça l'a aidé. Mais oui, des alternatives d'investissement, il y en avait plein. Il y en a plein. Il y a beaucoup de fonds. C'est juste plus long. C'est juste plus long. Moi, je dirais à n'importe qui veut faire du financement dans une business, c'est qu'il faut qu'ils se prennent tôt. Puis en fait, c'est une autre chose, ça, que je n'ai pas dit tantôt. Pour moi, on doit toujours travailler son network financier. C'est quelque chose que j'ai compris jeune, moi. J'ai travaillé son network financier, je veux dire, j'étais privé, puis je connaissais déjà 4 analystes de 4 banques différentes. Puis ça faisait 3 ans que je leur parlais de Human Pass quand on était privé. Fait que quand est venu le temps de faire un prospectus, ils connaissaient déjà la business. Tu sais, j'avais pas besoin d'y expliquer qu'on était on n'est pas dans les tomates, on est dans l'éclairage. Puis là, il faut que tu l'expliques. C'était clair, ils étaient venus à des trade shows, je les avais invités, j'avais développé une relation d'avance, j'avais préparé le terrain 3-4 ans d'avance. Puis les relations avec des financiers en private equity, c'est la même affaire. Tu ne les rencontres pas quand tu as besoin d'argent. C'est jamais bon, ça. Il faut que tu les rencontres quand tu n'en as pas besoin. Puis quand tu vois que tu n'en as pas besoin, ça les énerve parce qu'ils veulent placer de l'argent chez vous. Puis la journée que tu leur dis que tu en as besoin, ils sont excités qu'ils veulent mettre de l'argent chez vous. Fait que ça, là, c'est du relationnel. Il faut bâtir la relation. Il ne faut pas faire ça overnight. Le danger, c'est que les entrepreneurs attendent la dernière minute pour lever du frais que c'est quand the house is on fire. Tu sais?
Puis c'est tellement bon ce que François dit, parce que dans le fond, tantôt, on faisait la remarque que quand on est public, il faut toujours parler aux analystes, aux courtiers, il faut toujours promouvoir. Mais tout ça privé, il faut que tu fasses la même chose, parce que quand tu as besoin d'argent, il faut que tu aies bâti ton réseau, il faut que tu les aies gardés au courant. C'est pour ça que, dans le fond, c'est un job qu'il faut que ce soit fait.
Puis j'ajouterais peut-être un point toujours donner leur liste. Moi, comme entrepreneur, ça fait des années que je suis à mon compte. Une relation de confiance avec tes investisseurs, avec ta banque, c'est hyper important. Moi, quand je voyais que dans 5 mois, j'allais frapper un mur, mais j'appelais mon banquier et je lui disais d'avance. Je n'attendais pas, je n'étais pas nerveux de dire que je vais frapper un mur. Je disais, je pense que je vais frapper un mur dans 5 mois, je vais t'expliquer pourquoi. Puis à un moment donné, tu bâtis la confiance. Il y en a à travers mon honnêteté qui m'ont fermé les portes. Qui m'ont dit, ah ben là, on est moins à l'aise. Mais je me suis reviré de bord, j'ai trouvé quelqu'un qui m'a fait confiance, puis overall, de donner leur juste, ça paye tout le temps. Moi, c'est mon expérience personnelle.
Oui, mais là, côté de cette question-là, parce qu'on dit toujours que pour awash in capital, there's lots of it out there. Pension funds are getting away from the 60-40 model, looking for other things. Then, so the idea that some of us have is that there's a demand problem, right? And so what you sort of underscored is this problem of demand and how demand gets perceived in the system, right? So that's presumably part of your activity is to try and find out what the demand is. Do you have any thoughts on that? Is that we're talking in terms of you present yourself in a certain way. This was an ongoing activity. And maybe the model of demand in which we expect a Facebook or something like that, in which things come out of the blue, and somehow that the importance of this company is worn on its sleeve, and someone isn't doing work in conveying the demand to the capital markets, maybe that's a separate sort of problem. And I'm just wondering, in your experience in Quebec, and people are looking for where to put money, this becomes an issue.
So anybody who has a little bit of money, as an example, and are making money, the first thing that they start stressing about is where to put the money. You know, if you get some cash, a little bit, I just want to set the table for your question. You know, let's say you sell for a certain period for a certain amount, you end up as an individual with $30 million. You wake up in the morning, the first thing you're questioning is what to do with the $30 million. It's very tough to invest money wisely. It's very difficult. So a lot of people, they're just so nervous, they leave it at the bank. But if you really want to stimulate, it's not an easy task. That's why you are a professional. That's why he is a professional. It's not easy. So there are lots of money out there. They're looking to invest. They don't know where to go. So we have an educational role as entrepreneur. And I think that we need to explain the macro opportunity, not the micro, but more macro opportunities in the space we're in. This is the opportunity. This is the, and then what do you do? You target, you cannot be an expert as a private equity investor at everything. And that's probably another issue because they're investing in way too many different industries and they're not focused enough. And it's hard for them to really understand what the guys are telling them. So they have a generic approach to things and sometimes it's not the cookie cutter strategy, right? So they need to understand. So for me is you get a macro perspective. I'm in a space, so my approach was I'm in a $100 billion market. It's converting to LED and there's tons of opportunities for a lot of players. So if you believe that macro opportunity is good, then you need to bet on the right horse. Who's the right horse? And how do you identify that right horse? What do they have to offer? Do they have the team to deliver the plan? Do they have all of that? And it's like a speed dating, right? You're meeting with a private equity investor. You have a very short amount of time to really position your story. So I think you have to really explain what is the macro opportunity and explain why you believe that your company could win in that sector. And then they can either choose to bet on your company or another one, but that sector is going to win. So if you don't make them aware that the sector is going to win, there's no chance that you're going to convince them that your company is going to win. So that's what you need to focus on first, my perception.
What I would add perhaps that, we see a lot of companies who are acting in a great sector and it's a great company, they got the best widget out there and there's an opportunity to grow like this. But at the end of the day, whether you're investing in private equity or small cap stocks, the people make such a big difference. And unfortunately, one does not always have a long track record with these companies because they're young companies and they're just growing, but the people have a track record. And it's try to understand that François Xavier's been doing this for 25 years, the fact that he's got a great alignment of interests, he owns 30% of the company. Through our work, we spoke to several people in the industry, we spoke to members of the board and got some independence checks on the people because you could have the best business plan operating in the best industry. If the people aren't honest, objective, driven, motivated, it won't work, right? Because there's so many great business plans that end up failing. Yeah.
Other questions? Don't be shy.
On va voir un peu que vous avez dit en fait qu'il y a un trou un peu pour le financement des petites entreprises. Avec la fintech qui est en train d'émerger, il essaie de se mettre justement dans ce créneau-là de l'investissement alternatif pour les petites compagnies. Pensez-vous que c'est quelque chose qui pourrait changer l'écosystème?
Je vais demander à mon collègue peut-être de répondre à ça. Est-ce que tu es plus familier avec les fintech?
En fait, on en parle régulièrement. Les fintech, en fait, on parle du crowdfunding, il y a des sites de crowdfunding, mais que récemment, l'AMF a commencé à réglementer. On voit que mais ça m'emmène à quelque chose. Dans le cas, je vais juste faire une parenthèse. On parle d'éducation, on parle de crowdfunding, du PSX. Moi, je pense, avec la première slide qu'on a vue aujourd'hui, est-ce que le marché boursier est brisé? C'est quasiment ma traduction. Moi, ça me fait de la peine parce que je me dis c'est le seul, ça me fait de la peine dans le sens que c'est le seul levier financier qui peut réduire l'écart entre les riches et les pauvres. Je veux dire, s'il n'y a plus d'entreprises publiques dans lesquelles investir, ou si on est vraiment d'investir en crowdfunding ou avec des entreprises qui vont réinventer l'investissement avec les fintech notamment, comment on va éduquer nos jeunes à investir publiquement? Moi, j'ai souvent des gens qui me disent pourquoi tu es public? Tout de suite, quand ils me disent ça, je comprends qu'ils n'investissent pas public. Ils n'investissent pas. T'sais. C'est clair. Si tu ne joues pas à la bourse, c'est clair, tu ne peux pas comprendre qu'un entrepreneur va aller là. Bon, ça, c'était ma parenthèse. Pour répondre aux fintech, c'est sûr que le crowdfunding, les montants ne sont pas assez gros, c'est limité, je pense, à 250 000. Il y a toutes sortes de réglementations. est-ce qu'il y a vraiment un tout? Je pense que le tout est créé par la réglementation, en fait, par l'échiquier des banques actuellement qui sont beaucoup trop grandes. Est-ce qu'un fintech va réussir à se placer entre le crowdfunding et le TSX pour les petites capitalisations de TSX Venture? C'est un défi en soi parce que c'est un marché hautement réglementé. Fait que c'est facile de faire une plateforme. En fait, dans notre domaine, chez Urban University, on crée ce qu'on appelle le Content Exchange Platform dans un marché qui n'est pas réglementé. Fait qu'à ce moment-là, on a beaucoup de facilité. Le fintech, ce n'est pas de créer la plateforme qui est difficile, c'est d'arriver dans un marché réglementé avec beaucoup d'acteurs. Je pense que ça va être difficile. Je pense qu'on serait mieux d'essayer de fixer l'écosystème qui tourne alentour du TSX Venture, qui est un outil au Canada qui, à mon avis, a atteint une maturité qu'il faut juste polir un peu.
OK. Quelque chose à ajouter là-dessus?
Ben, oui, mais l'investissement dans les plus petites sociétés, là, on va le voir souvent plus au privé qu'au public, effectivement. Puis d'ailleurs, il y a une demande de gens qui ont de l'argent, qui voudraient investir dans des petites sociétés qui ont un potentiel de devenir grandes, et ils n'ont souvent pas accès à ces sociétés-là. Et parce qu'il y a un écosystème de business privé qui existe, qui ont. Il y a Ange Québec, il y a toutes sortes de choses-là. Mais nous, on se fait demander par plein de monde qu'on connaît qui ont de l'argent, qui aimeraient ça, dire si un deal, moi, ça me serait intéressé d'en mettre dedans, puis faire ci, faire ça. Tu entends souvent ça. Puis j'ai commencé à en parler avec des gens dans des milieux bancaires qui sont dans le wealth management, qui ont des gens qui ont d'ex-entrepreneurs qui ont fait de l'argent, puis tout ça. Puis on commençait à discuter et à réaliser qu'il y a peut-être une nouvelle formule de fonds à créer pour l'industrie du wealth management qui investirait en private equity dans des plus petites capitalisations. Parce que les fonds de wealth management établis qui investissent institutionnels puis de wealth management, comme par exemple Pembroke, ils ne vont pas vouloir prendre une petite participation de 300 000 500 000 dans le business. Je veux dire, ça ne bouge pas l'aiguille. Mais il y a plein d'autres entrepreneurs, autres que Ange Québec, qui seraient prêts à le faire parce qu'ils font confiance à leur courtier. Tu sais, quelqu'un qui dit que lui, il concentre son wealth management à travers un courtier, puis lui, il n'a pas envie d'aller dealer avec Ange Québec, avec Pierre Jean-Jacques à gauche. Il dit, moi, mon courtier, je fais confiance. Fait qu'il y a des discussions que moi, j'entends que des courtiers commencent à réfléchir à dire, existerait-il un genre de mécanisme, ça existe aux États-Unis, un mécanisme de fonds, OK, qui crée ça. Fait que, tu sais, par exemple, le courtier qui gère, je sais pas moi, 500 millions, puis ce courtier-là qui gère 500 millions pour une gang de ses clients, il dit, moi, je prends 4% de ça, 20 millions, OK, puis ça, je l'investis dans du private equity. Fait que j'amène une pondération, j'amène quelque chose de différent pour mes investisseurs. Fait que là, tu dis, le problème que les banques vont avoir, c'est au niveau de la compliance. Ils vont dire, as-tu de la liquidité sur ton investissement? T'as-tu ci, t'as-tu ça? C'est quoi le risque? Tu vas faire signer un disclaimer shot loan à tes qu'ils investissent dedans. Mais la réalité, c'est qu'ils n'ont de la liquidité parce que ce fonds-là qui investirait, par exemple, en co-invest dans des privés, okay, il y a toujours des in et des out dans le wealth management. Il y a du monde qui sort, il y a du monde qui rentre. Fait qu'ils peuvent, eux, gérer une liquidité. Fait que moi, je pense que dans le wealth management privé de fric, ils pourraient organiser, à travers des mécanismes de fonds comme ça, avoir un nouveau véhicule pour investir dans des plus petites sociétés.
Ça ressemble beaucoup à Ange Québec, François. Puis, dans le fond, sans, mettons, cette mécanique-là, ça reste que l'investissement en société privée pour les individus, c'est réservé aux investisseurs accrédités. Donc, on connaît beaucoup de monde qui ne sont pas investisseurs accrédités, mais qui ont l'appétit pour le risque. 25-30 ans, tu as un bon salaire, tu n'es pas nécessairement.
Là, ils peuvent aller sur le venture.
Ils peuvent aller, c'est ça. Ils peuvent aller sur le venture, mais ils ne peuvent pas nécessairement aller dans le privé, même avec des fintechs qui peuvent. Je pense que c'est là que le venture, puis c'est pour ça que, dans le fond, le venture, je crois qu'il y a un élément important. Quelqu'un qui veut vraiment investir dans une petite société, qui pense qu'ils vont être winners.
Sauf que c'est pas tout le monde qui est fait pour être un CEO de société publique. Tu sais, il y a du monde, toi, tu t'exprimes bien, tu communiques, tout ça, puis il y a des CEO, là, c'est des cérébraux, là, qui regardent, là, tu sais, eux autres, tu les amènes pas devant un investisseur, un analyste, tu t'engages des gens comme Pierre Boucher pour les aider. Parce qu'ils ne savent pas communiquer, tu sais. Et toi, tu as ce talent-là, tu sais, mais il y a beaucoup d'entrepreneurs que tu rencontres, c'est des super opérateurs dans ce qu'ils font, mais tu les mettrais dans une structure de société publique et s'ils ne survivraient pas.
Aux États-Unis, là, tu serais surpris, les CEO ont des cours comment présenter à des investisseurs, puis comment monter une présentation. Puis quand ils la livrent, là, je veux l'acheter tout de suite, là, ils sont tellement bons. On n'a pas ça au Canada, mais ça les aide à se financer.
On voit ça, je l'ai vu dans une entreprise, du nom de Missas dernièrement, ils ont vraiment séparé le poste entre le président et le CEO pour justement permettre d'avoir un président qui est capable de parler des investisseurs, qui est capable de faire la job depuis public versus le créateur de produit qui, lui, dans le fond, c'est un célébral puis pense que sa plateforme. Mais c'est un bon point, François, effectivement. Sur les Six Ventures, si tu ne te débats pas, c'est sûr que le marché public, quand tu perds super vite. Moi, mon stock a passé de 75 cents dans une scène en quelques semaines. Mais quand tu réussis aussi vite, dans le sens que les gens, le public, en fait, les investisseurs ont une capacité d'anticiper, ils sont bons là-dedans. Si le président n'est pas capable de parler de façon ouvertement de ses problèmes ou de ses capacités à livrer, c'est clair, le stock ne décolle pas. On en voit trop des entreprises sur le T6 Venture, ils ont des super belles entreprises, mais le stock ne décolle pas. Ça prend vraiment une certaine vélocité, en effet.
Une dernière question, pour terminer, parce qu'on n'en a pas beaucoup parlé à date, mais je voudrais juste revenir pour conclure. Qu'est-ce que le gouvernement ou l'AMF devrait faire, à votre avis, pour les marchés des capitaux? What does the regulator or the government should do?
Moi, je peux-tu répondre à cette question-là?
Oui.
Parce que
Capital market.
elle me touche beaucoup. On a M. Derry aussi, ici dans la salle, qui a participé à l'émancipation des REA, n'est-ce pas? Et on a travaillé ensemble en 2012 pour changer une clause des REA. Moi, je pense sérieusement que pour les petites capitalisations, la perte des REA, c'est pas équitable. Parce qu'on regarde les fonds privés, ils ont des déductions d'impôts. Dans le sens, vous les avez. C'est vraiment pas équitable. Donc, on est en train de dire pour ceux qui veulent investir sur des capitalisations boursières, vous n'avez pas de retour d'impôt, mais si tu le fais via la FTQ, tu en as. On avait ça avec les REA. Donc, les REA permettaient un retour d'impôt pour des actions qui étaient publiques, des nouvelles émissions d'actions de capitalisation.
De petite capitalisation. Ouais. Parce que moi nous, on a été public, puis il y a des investisseurs qui ont créé un fonds REA, puis ils ont pris le mot de passe, puis ils l'ont mis dedans. Là. Fait que je ne sais pas si c'est relié au venture, qu'il n'y a pas de REA. Mais nous, on a eu, par exemple,
en quelle année?
En 2014.
OK, bien c'est juste à la fin 2015-2014, je pense que les REA ont pas été renouvelés. 31 décembre. C'était rentré quand les REA existaient encore.
On en avait encore.
Moi, sur la levée de fonds que j'ai faite initialement, le lead order, c'était un fonds REA. Puis sur 2,5 millions qu'on levait, puis 1 million.
Donc, REA, d'autres commentaires?
Oui. En termes de gestion de portefeuille, nous, ça va, mais si je quittais Pembroke avec pour partir en affaires en entrepreneur, ça serait très, très difficile. Parce que le niveau de réglementation, pour se protéger contre les Vincent Lacroix, etc., c'est tellement lourd aujourd'hui avec les audits, tout ça, que c'est très difficile de partir en affaires. C'est souvent ces investisseurs émergents-là qui vont investir dans les petites capitalisations. Donc, c'est peut-être quelque chose à considérer.
Donc, le régime tel qu'il est en place favorise plutôt des grosses capitalisations et des plus gros investisseurs.
À cause des coûts.
OK.
De gérer.
Yeah, I just have one comment. I think it's important from the regulator's perspective, to pay attention to what's going on, which sometimes, the studies aren't commissioned enough, I think, and data is not available enough. But I think the most important thing is for regulators to be adaptable. So, I bring it back to the venture exchange and the CVC program, which you utilize. So the history of it, some of my research looks at some of the history is, back in the mid-'80s, like I said, this blind pool program led to a lot of fraud in the U.S. And then some of these guys these promoters came up from Utah and Colorado and tried to do the same sort of stuff in Alberta. So they came to Alberta first. And the first few led to fraud as well. They caught a few guys at the airport with suitcases of cash. It was a pump and dump scheme. There's some news articles written about that. But I thought the regulators were astute at the time in that, they said, look, this is potentially a good thing in principle, but we just don't have the proper regulations in place to monitor it and to make it work. So they put a moratorium on, and then they came back with the set of regulations that were actually very effective. It's evolved over the years. And part of the reason why it was so important at the time in Alberta was, oil prices had cratered. and commodities were down, and a lot of the private equity capital tends to be in central Canada and the east, and companies needed access to capital, junior oil and gas companies at the time in Alberta, which was critical. So the government saw this blind pool program potentially as an opportunity to allow companies to raise capital, but they also wanted to think about investor protection. So they didn't want to make it too onerous on companies, but they also wanted to look at protecting the interests of investors. So I think one of the good things was that the government was adaptable and saw a program that could potentially work and found mechanisms and regulations to make it work. And the interesting thing is, back in the day when I dug up those old news articles, people in Ontario and Quebec actually said, these guys out in Alberta are crazy. This would never work in the rest of the country. They're cowboys, and all kinds of name calling. And then subsequently, it was such a success in Alberta that Vancouver was losing severe listings on their stock exchange. So they adopted it, then Manitoba adopted it. And then when the venture took over the Vancouver and Alberta stock exchanges, it spread to Quebec and Ontario, and it's been a major success. So I think it speaks to, I guess, the adaptability of regulators and seeing opportunities as they rise, and putting appropriate regulations where they understand access to capital issues, but also investor protection. And, I see that as a major success story of something that might not have happened had some people had their way, I think. So I think that's important for regulators to be adaptable and pay attention to what's going on in academia, in the industry, and in policy circles as well.
OK.
Yeah.
Quelque chose, non?
Oui, je pense que le point important, effectivement, c'est que le régulateur fasse preuve d'une certaine souplesse. Et on revient toujours à l'idée des canaux de marché. Si le crowdfunding peut aider dans certaines phases, notamment l'amorçage, je pense que le gouvernement devrait regarder ça avec une certaine attention et permettre que ces mécanismes viennent soutenir le marché dans les endroits où il y a encore des gains.
OK. Oui.
From an operator point of view, when you're running a public company, I think the frequency of reporting is an issue. I don't think it's very a necessity to report every quarter. I mean, we've been doing it for years, and it's fine. I mean, you can do it, but you really build value while focusing on your business. So once you report your quarter, you're already like 35 to 40 days after the previous quarter, and now you are in reporting, and then immediately you want to talk to shareholders, talk to analysts, talk to everybody. Next thing you know, you're starting the next reporting again, and it goes on and on and on. And if you look at the London Stock Exchange as an example, they report only twice a year, so it's fine to report twice a year. It's sufficient information to know where the business is. And if someone specifically want to have some color and understand how is the general conditions of the market, they can pick up the phone and you can still have talks to your shareholders. But the official reporting process with the regulation, the MD&As, and everything that you need to go through, the disclosure, process and the cost for the business to do that is pretty substantial. And I think I would welcome a reporting every 6 months instead of every 3 months, because you can focus on the business a little bit more.
OK. Douglas?
Sure. I don't want to keep people from drinks, so I'll be very quick. The one thing I hope you remember before you go or after you go is that we have a big tendency in Canada to give more money to older companies. This is more public money, that is, more of your taxpayer dollars goes to older companies and larger companies. That's really sobering. I mean, that's we would think that we'd have a mandate of promoting entrepreneurs and having public policy that should be geared towards helping smaller companies grow. And a massive amount of money gets spent, and the design of the programs that we currently have arguably could be improved based on evidence that we see from countries around the world. And so if you just take perhaps one example of this is these retail venture capital programs, such as the ones that we have in Canada. We have a listed private equity association based out of the UK, but it's a worldwide association, and they'll include amongst their members for listed private equity, include amongst their members funds like Onyx, some leading Canadian funds, but they definitely don't include tax subsidized retail venture capital because they don't think the structure is the right one. And so there's good reasons for this, things that we should be thinking about, and hopefully improve how our tax dollars get spent in the future so that everybody's better off as a result of it. So thanks again for the opportunity to be here. I know I'm in a tough crowd, so hopefully say let's have some drinks.
Merci beaucoup. Merci à nos conférenciers.